Hemant, you want to start with the opening speech?
Yeah. See, I'll just I'll start it.
Thanks.
Okay, so good morning to all. A very warm welcome to all participants. Myself, Hemant Mehra, ThinkTank Multidisciplinary Global Platform, Chapter Leader, welcomes you all to ThinkTank Global Conclave for India Growth Story and Meet the Expert Series, covering in detail management, ThinkTank, valuation ThinkTank, then financial reporting ThinkTank, forensic audit ThinkTank, and the entire gamut of financial capital market ThinkTank. As a major part of ThinkTank at the rate Ved Patra, Vivek in Sanskrit means knowledge and wisdom. Patra is innovative news updates containing slides and sharing latest development and real life examples by CEO, CXO, CFO, specialist, and professionals with global experience. Today we have ThinkTank Multidisciplinary Global Platform special meeting for all stakeholders in finance, corporate affairs, industry, and profession. ThinkTank has been in existence since over a decade. Idea conceived somewhere in 1991 to have conferences, conclave with CEO, CXO, CFO, panelists, and specialists, sharing experiences and real-life examples. Our panelists are financial leaders working in reputed companies or professionals since many years and have deep domain knowledge. ThinkTank platform now digital has got overwhelming response globally on digital media and expanding rapidly through LinkedIn, Facebook, etc. Our participant and expert have rich experience in industry profession who have done CPA, CFA, CA, CS, CMA, ICAI, and all other professional degrees. They are sharing the rich experiences, knowledge, wisdom, spreading as a reach out to this ThinkTank initiatives. Due to overwhelming responses in our annual report, corporate strategy, and ESG, we have announced 60 awards and recognition. 60 stand for profit, people, planet, professionals, promoters, promoters, and platforms. For corporate annual reports, this is for corporate annual report analysis, professional achievers, CFO, CXO, CFO, with a very respected jury, with rich experiences in interaction with stakeholders and boards. This recognition and awards will be announced with a religious profession of scrutiny and choice and direction with the participants and will be given digitally and if possible in a well-located auditorium in Mumbai like Lok Sabha or any other similar kind of facilities available subject to pandemic rules. As the participants, we are aware recently we have launched a much awaited reference, sort of newsletter, not titled as ThinkTank Patra, India Growth Story. A comprehensive conference material, compilation over 600 pages, sharing experiences by CEO, CXO, CFO, specialist, with latest development and series on blocking, regulatory, fraud, financial reporting, Ind-AS, technical analysis, ISA bank audit, corporate affairs, would be available for the subscription and any ethical contribution by well-wishers. We'll also be covering important latest developments as suggested by many participants in coming weeks. Example, valuation and financial modeling, health is wealth, cyber securities, blockchain, MSME, etc. We request all to subscribe to ThinkTank YouTube channel for watching summits, conclave webinars, and join Connect Network on ThinkTank webinars group on LinkedIn and Facebook pages, Telegram channel, especially created and suggested the suggestion of many participants and panelists. We once again welcome you all and panel share. We are just. I especially am especially thankful to my colleagues in the digital global team, naming the fews like Anurag, Archana, Ashwari, Nitesh, Vihit, Malvika, Nipun, Nischal, Pramod, Praveen, Rakesh, Rucha, Pramod, R. Mehra, Anand, Manish, Santosh, Subha, Snehal, Sandeep, Umesh, Vijay, Vikas, Yogesh, and others for regularly contributing to ThinkTank at the rate way. We have an excellent ThinkTank multi-disciplinary platform seminar. Eminent stalwarts and specialists sharing experiences and latest development. Let us have an interactive event. And with these few words, I hand it over to Mr. Manoj for further proceeding information. Yeah, Manoj, over to you.
Thank you very much, Hemant Bhai. It is indeed a delight and a pleasure for me to be all of you in this excellent series, Meet the Experts Think Tank Wisdom series. And it's indeed a delight. Over 1,000 speakers are contributing and viewing the proceedings, interactive proceedings with experts, where CEO, CFO, specialists share their views on latest developments and real-life examples. Today, once again, wonderful series, knowledge sharing, experience sharing. That's the way the community will grow, India will grow, India growth story, #1 in the world, fastest growing economy. Today, it is indeed a pleasure. We have eminent experts, participants coming. I can see Mr. Sandeep Baldava, rich experience in the profession, forensic investigation, frauds, reporting, and global experience, contributing to the India growth story. Mr. Dayaniwas Sharma is here with us. Mr. Dayaniwas Sharma, excellent professional experience with the topmost professional body in the world, ICAI, pioneering initiative. Mr. Anil Bhandari, pioneering initiatives for professionals, Western region, then India, and globally, contributing on digital initiatives, taking the country forward, forensic standards, many initiatives. There are many board members also here with us. So many are going to watch the proceedings, interactive proceedings. Some of them are going to share their thoughts. It is indeed a pleasure for everybody to share their thoughts. Some of them are challenging issues we are facing. This week itself, we have seen challenging issues. In 2 listed companies, there have been resignations by independent directors. And in many of these companies, indirectly or directly, there are issues either in the reporting and also sometimes on diversion of funds, whether it is NPAs or loans, whatever. I'm referring to 2 specific companies, PTC India, power trading, a joint sector, and also PFC Financial Services. So lots of developments, all these issues have been usually addressed by professionals. There are solutions, and we always look at solutions, but every time the problem is different and maybe packaged differently. And then innovation is a need for the hour, and we look at innovations and contribute. Ultimately, solutions are there. And what is the whole purpose of it? To see India growth story move forward. We have the best professionals. They are projected also as the best professionals, the best professional bodies contributing to the India growth story. Now, before we have Sandeep Baldava contributing his expertise, a few thoughts from Mr. Dayaniwas and then Anil Bhandari. Mr. Dayaniwas, you are here with us? We can see you with your video on. Until then, Anil, you can share your thoughts.
Yeah, thank you, Manoj. First, I must congratulate you and everybody who's been part of this platform, Think Tank. I think a very appropriate name as well. getting all the professionals together on this platform. And I think you're really lucky to have Sandeep on this platform. Sandeep has been one person that I always look up to when it comes to fraud forensic investigation. So I'm sure all that you have today are going to really enjoy some really practical insights from Sandeep. Having said that, I think fraud is a very, very interesting topic. I keep telling people that probably you will never see fraud in the future. What I really mean is, if I take you maybe 3 or 4 decades back, you would probably see fraud in the way that people used to be defrauded, taking money from them and not returning, forging a signature on checks, taking away cash from petty cash, forging signature on property documents. So those are the kind of frauds that you would probably see maybe 4 decades before. And the size was kind of, between 1 million, $10 million. And the controls that the companies had to keep at that point in time was having employees with high integrity. That was probably one of the best controls that a lot of the old generation companies had to keep in. And forensics during those times had to be more physical. Then if I take you just 2 decades back, Manoj and Hemant Bhai, I think we had balance sheet frauds from Enron. We had Ponzi schemes coming in. We had credit card frauds. And the size moved from 10 million to maybe 200 million, $300 million. And the control that the governments envisaged across the world was audit committees were made more responsible and ERM frameworks were evolved. Again, forensics had to be more physical during those times. Now, if I just take you probably just a decade behind, you would have started to see a lot of online frauds, a lot of ATM frauds, a lot of SIM cloning frauds. And the size has now moved from maybe say 100 to maybe $500 million. What did the government do? The governments came out with fraud reporting standards. The big four consulting companies came out with fraud risk frameworks and so on and so forth. So every time that, something is evolving around the world, people are, of course, trying to reevaluate the control frameworks. The governments have a different expectations today. And similarly, you have conceptually different ways of doing forensic. I don't know. I just want to take you maybe a couple of years back, and you would have suddenly realized that you have frauds like the SWIFT frauds, the money transfer frauds, which suddenly starts running into billions of dollars. Even before you realize billions of dollars have moved out. And here, companies are trying to integrate the reporting standards with business intelligence solutions. And you started to look at artificial intelligence solutions and so on and so forth. I just wanted to end this conversation by saying that, how is the future looking to us? Today, you literally don't have any data in your control. Data is always and very fast moving towards cloud. Your DMATs, I don't know whether you have shareholdings. And if you have one, you will typically not have it physical any longer. You're not expected to have currency which is physical any longer. It's likely to be all shifted to clouds, the so-called cryptocurrencies coming in and so on and so forth. Right? Can you imagine if these companies who are actually holding the assets on your behalf start to get together and do fraud? I don't know. I mean, millions of lives would be lost. You have brokerages companies, and today, typically, everything is run by algos. Can you imagine large 4 brokerage companies across the world getting together, and suddenly you would not even realize the quantum of the frauds that you can think through? Banks are likely to get into P2P model, which is people-to-people model, and the frauds are going to be very, very complex. Digital payments. Look at accounting. A simple thing like accounting is actually going to be near electronic, which means electronic invoices will get you fraud, which will be in near real time. So I think, identities are going to be lost in the future. Your lives could be lost and so on and so forth. So not getting you too much into nitty-gritties and detail, and I'm sure Sandeep here would be talking about all of these with you. But I think understanding fraud, keeping relevant in times, and doing frauds around these areas will actually take you to digital forensics. And digital forensics is actually crossing boundaries today. So how do you even cross boundaries today? So all of these are interesting. All of these are highly complex. And for us to be able to even imagine sometimes is very, very difficult. I think the good thing that the Institute has at least done for our fellow chartered accountants and professionals has brought out the forensic investigation standards, because at least some aspect of the fraud investigation that our professionals do today, which could typically be balance sheet frauds, at least to start with, and maybe some other related frauds around banking systems and so on and so forth, is now having a structure, which means all of us are able to follow a structure, demonstrate consistency in what we're doing, and ensure that we demonstrate this to the regulators as well. And in that light, I think the forensic accounting standards, forensic fraud investigation standards were very, very important. And I think I must congratulate the Institute for the first time, having come out with it very, very quickly, just in like kind of 1 year time. And I think we are one of the first ones in the world to have a very comprehensive fraud standards, fraud and forensic investigation standards. And of course, Sandeep played a very important role. We literally crowdsourced these standards. So I think we have a fantastic opportunity on the other side for all our professionals. And this opportunity would again run into millions and millions of dollars. And I'm sure Sandeep would also touch upon all of those areas. So, well, thank you so much for inviting me today on this platform and letting me share my thoughts. I think this is one area which none of us are likely to comprehend. None of us would actually ever know where this is moving in the future. But I think all of us, I'm sure, are very, very interested in trying to understand the bits and pieces of what we can understand as human beings. But I think with the fraud in the future is not going to be preventive. The mechanism of control, it is actually moving towards being predictive. And that is also a very, very interesting areas for like-minded people to understand. So thank you, Manoj and Hemant Bhai and everybody for allowing me to share my thoughts. I think it's a very good topic for one to have. And I'm sure Sandeep is going to do a fantastic job on that. Thank you once again.
Well said, Anil. I remember at the pioneering initiative level, you have worked at the grassroots, implementing the think tank concept at the grassroots, study circle level, study group level over 20 years ago, and taking this concept which conceived and implemented immaculately and successfully with multidisciplinary platform all over India at the grassroots and globally. So India growth story remains at the forefront in the world for decades to come. And this century is for all professionals of India contributing globally. And you are also a part of the book, which has been authored by Sandeep, chapter by chapter.
I couldn't be not a part of this, because believe me, the way the forensic standards have come out, Sandeep played a very anchoring role in that. Needless to say that there were a lot of experts across the country, but I think the way that we kind of worked around it was exceptionally well. For the first time, I think, being a part of the institute for so long, but I think for the first time we ran it very, very efficiently to global standards. And Manoj, while I can visualize, I do kind of imagine things, and think tank was one of our thought areas several years back. But you are one of the very strong executioners. You're the one who's executing this with all your team members. So I must congratulate you all, and thank you once again.
In fact, I see Gaurang is also here.
Yes.
We have planned, as usual, every year for last 30 years, we have been doing Union Budget Think Tank, 360-degree perspective, taxpayers perspective, corporate perspective, industry perspective, the specialist perspective. And there were over 800 participants last time, interactive over 10 experts. On the same day, 1st of February, 5 to 8, it will be held again this year. And I'm sure the takeaways of that, you would take it forward and representation through appropriate forums and professional bodies.
No, absolutely. I see Jayesh Bhai Gandhi also very, very, quietly listening to all that we're talking about. You've really got senior professionals up there. So, Manojji, thank you so much. We would definitely do whatever we can best around your budget areas as well. Happy to contribute to it.
Right, Jayesh Bhai
thank you.
Speaker. Yeah, Jayesh Bhai.
Yeah.
Yeah.
So,
Your
yeah,
thoughts?
thank you. And I think as we were talking, forensic has become very important now. And that is how you see the book, you see a lot of professionals going into that. And one thing I want to just distinguish that, you know, statutory audit and forensic audit is different. Though, you know, now there are a lot of regulations which says that in a statutory audit, in certain circumstances, we need to use forensic audit. You know, you need to be expert because your mindset for forensic investigation has to be different than statutory audit. With forensic investigation, your mindset is that there is something wrong. We need to figure out what it is wrong and what has been done. In statutory audit, generally that is not there. And one more, you know, aspect I would like to cover that, you know, in recent past, you see a lot of complaints, lot of whistleblowing and all that. And that is actually aiding to, you know, forensic investigation. And now SEBI has also mandated that whenever you have a whistleblowing complaint and all that, you need to mandatorily do a forensic investigation. And that is why I think we have a right forum today. And Sandeep, my good friend, I've used his services many times, and I think it is quite effective. Finally, you know, one may say that you may not concluding forensic investigation and pinpoint, but definitely it helps in most of the cases in strengthening the control. And that is actually very important because as we were discussing earlier, everything is now digital, everything is remote, and that is where the fraud, the way the fraud is happening has totally changed. Nobody will just pick up the things and go away and that is a fraud. Actually, those days are gone. So the way fraud is happening is totally different. And that is why the response to that, you know, investigation also needs to be different. And we will hear more from Sandeep. That's all from my side as an opening remark. Thank you.
Well said, Jayesh Bhai. And on ThinkTank, Hemant Bhai mentioned about ThinkTank conceptualized in 1991, but it is Jayesh and myself. We were talking about ThinkTank in 1981, right? When both of us were students.
That's right.
It was a dream. And then it got conceptualized and implemented. And now, thanks to pandemic, the positive sides of it, globally coming together, speakers contributing from all over the world, including from US, including experience with the World Bank. I know the topmost people in insurance field and board members of Citibank who are actually sharing the proceedings of the meetings in the US, and people come to know about ThinkTank from US also, those who are engaged with US companies. One good thing is that the board members of top corporates, listed and unlisted, like to engage with think tanks, and they watch the proceedings like today. Results of five companies from top groups, Tata's, Bajaj, Reliance will be discussed. Reliance results came after 7 yesterday. A deep dive will be done with a 360 degrees perspective today. We will also discuss Tata companies, Bajaj companies, the good, bad, and ugly, large caps, small caps, mid caps. This is how the board members engage with us. People in audit committees, nomination committees like to know what is being discussed, and all of them are also welcome. Like everybody knows the developments of PTC and PTC Financial. Everybody means may not be everybody, but many board members, vigilant ones know. Today, the person who conducted the perception study of PTC and PTC Financial a few days back, he is here with us and watching the proceedings, and may also share his thoughts, both good, bad, and ugly. The ramifications of the resignations of independent directors. Some of the top people have shared with me, prima facie collectively, if all the IDs resign, prima facie it's a serious issue. Of course, it is a serious issue, but what is the solution? What goes behind? that is more much more important with the professional think tank sharing. And ultimately, objective is the India growth story. We should have the best corporate governance standards in the world, which we have. And also we should have the best practices, the best board practices in the world. And we have board members here also. Right. Santosh is here with us also. Santosh?
Yes, Manoj.
Santosh, 1 minute from you. The live engagements with everybody on Think Tank. And then you request Sandeep to start his knowledge, experience, sharing experience, insights, case studies, and the great book he has written. And I hope there are many more sequels to the book. We will give you many more thought stories, thought experiences, real life cases. You should come out with it, and many more which we'll give you. So sequels are important. Every year a sequel. Like Santosh Mehra is the author of 7 books, right? And I remember over multiple books in a year, and you will also cross maybe a silver jubilee in the next few decades.
No, so Manojji, and very good morning to all of you. So I think I'll just pick up on what Jayesh Bhai and Manojji mentioned. That absolutely I agree with Jayesh Bhai that forensic investigation and statutory audit are two different things. Although these days, because of media reports and the regulatory expectations and stakeholder expectations, a lot of time it's kind of a lot of people look at it that as though the forensic is a part of statutory audit. Obviously, CARO reporting and reporting under section 143 subsection 12, there are certain fraud aspects that we now have to report on as statutory audits. With regards to Manojji, your point on PTC, yeah, I saw the media release where the 3 independent directors resigned, and it was quite a long letter, I think running into 12 to 15 pages.
55 pages plus, all of them together.
Yeah, and some of the, I haven't seen this kind of a letter as such from independent directors as a annexure to their resignation. We have seen what happened in Satyam and some of the other ones, but very interestingly, I think some of the governance aspects, the managing director, the conduct of board meetings, it was, I wouldn't like to speculate on the matter. It's SEBI will probably look into it, but it's, if it's factual, it's quite sad that these things do happen. And yeah, of course, look forward to the session from by Sandeep. So without without much, I wouldn't like to delay his session. I think we can start with Sandeep's session.
Yeah, Sandeep, over to you. And Mr. Dayaniwas Sharma, you are welcome to share whenever you want. Mr. Dayaniwas told me he will be sharing by 11 o'clock, but anytime you are welcome, because I know you are at a certain place. It is challenging, but looking forward to.
So Daya, you are there. You want to go ahead or you want me to start?
I think Sandeep, you can start. I think he is not there.
Okay, so thanks everyone. First of all, thanks Manoj and team for inviting me for this session. So from whatever I heard in the last half an hour, I can clearly see the initiative that is taken for quite some time, and I think you are sustaining it for such a long time, which is fantastic, because most of the initiatives, they don't get sustained. And I will spend next 45 minutes taking you through some snippets of the book and also some background on that. But I think Jayesh Bhai, Anil, and Manoj, Santosh have done my task easier, because they already set the tone on what was the requirement for this book. Because a lot of the points that they have said, and including the questions that come up from those, are answered in the book. And that was the entire background of writing this book. Because and I tied up with another colleague of mine, Deepa, who is again an expert in sort of reporting standards, as well as she was with ICAI earlier. So she has a good grip over the technical aspects of the regulations. And I have done investigations over the last 24 years now. So I have the understanding of the practical aspects of how things work, and that's how we tied together to come up with this book. So when we came up with this book, the objective was that right now there is no single document available in the country that captures the roles and responsibilities of different stakeholders. So you may have something that talks about role of independent directors, role of auditors, or role of the independent directors, internal auditors, or management. But there is no document or a publication that captures what are the regulations concerning all the key stakeholders that are there in a corporate governance environment, right from board, audit committee, independent directors, the CXOs, independent internal auditors, and then of course the forensic accountants. So the first thing that we try to do is that consolidate along with case laws and case studies what is the role and responsibility of different stakeholders to identify, prevent, and detect frauds as well as report frauds. So that was the first sort of task that we did. The second thing is it's very important whether you are a professional, whether you are an independent director or an internal auditor or a statutory auditor. In today's environment, it is important to understand how frauds happen. What are the different theories through which fraud is explained across the globe. So the second part that we did is consolidate all the different aspects related to fraud, including we found that there is no common publication that captures all the different definitions of fraud. So what does the Companies Act say about fraud? What does the contract law say about fraud? How does LODR, sort of consider fraud? And then how do you include things like insider trading, etc., as part of that, gamut? So that's the second part where we try to define at a conceptual level and at a understanding level what are the different concepts that are related to fraud, ethics, etc. Then the third part was, to take everyone through how a forensic investigation process, works. Because it is important, irrespective again which role you are in, you need to understand how to uncover a fraud as well as how to identify where you would get the evidence to discover the fraud as well as establish the fraud. So in a very systematic way, we captured again in a layman language, again technical jargons used throughout the book, right from a student to a professional who wants to enter into this field or into audit, internal audit, to help them understand. We have used very simple concepts to explain each of the steps that happen in an investigation process. Then finally, what we thought is, while I think we have discussed all these topics, and in each one of these cases, we included case studies. And right from, I started with Arthashastra actually. And because while I think the digitization is happening across the globe, but let me tell you that whatever different types of frauds that were identified in Arthashastra, there are around 40 different kinds of frauds that are identified in Arthashastra. All those 40 frauds, kinds of frauds still exist. After all this, years of 2,400 odd years, with adding, sort of so much of technology, so much of AI, ML, etc., only 3-4 different new kinds of frauds have been defined as of now. So broadly, what used to happen then continues to happen even now, but maybe in slightly changed, sort of dynamics because of the use of technology and use of digital environment. Otherwise, the concepts have remained the same. So it was important to understand those concepts. So what we did is we have included close to about 100 case studies as part of this book. So to explain how different frauds happen, how they get repeated again and again, what are the mistakes that corporates do or we as society do, where we let people continue with the frauds, thinking that taking any action would mean that we would lose our reputation or our reputational will be in the damage. So that is the reason why we included different case studies so that we understand what is happening. I'll give you one simple example. Everything that happens on the accounting fraud, if you study the history, most of it is repeated again and again and again. So the examples that you see of the modus operandi that was used, say in Enron, was used in WorldComs, was used in Parmalat, and probably in Satyam some bit of it. And recently there was another case discovered where it was again noted that the company was showing close to about 1,500 crores of current account and bank balances, but at the same time they had borrowing worth 2,500 crore, and nobody was able to identify why would you pay interest on 2,500 crores when you have balances available in your accounts which are not yielding any interest. And ultimately that came out in the public domain. So to understand all these cases, we explained what happened, how it happened, and how those could have been discovered maybe earlier. So this is just a gist of what we have covered. And one angle that again we tried to differentiate over here is that for each of the topic, we brought in an expert from the relevant stakeholder community to cover that topic based on their practical experience. So for example, Ponzi schemes, we got in the Joint Director, National Police Academy, to talk about, because he has investigated two of the largest cases in India successfully, including using for a forensic. So we requested him to sort of provide his insights on this topic. Similarly, sort of CEO, CFO, independent director, audit committee, chair, internal auditor. So we requested each of these key stakeholders to come and provide their practical perspective in terms of where they see the stakeholder playing this role in prediction, prevention, detection, and investigation of fraud, and finally, obviously, on reporting of fraud. So a lot of practical insights gathered throughout this book. What we have also done is, in addition to the existing concepts that exist across the globe, we also tried to come up with our own new concepts based on our experience practically on the ground. And some of those are like I actually coined this term conveniently delay repayment scheme, because over a period of time we saw that the corporate debt restructuring scheme, which was the original word for CDR, slowly it became a kind of a practice that people tried to sort of use different loopholes that were available in the scheme to conveniently delay the repayments that they were supposed to do. So that is how it became a conveniently delay repayment scheme. Then Robinhood fraudsters. This is again a new term that we have coined to explain how some people start with the concept that we are taking this money, or we are doing this fraud for the broader good, or to pass on to the community that they need it, and then suddenly they start making money for themselves. Then I have no choice, fraudsters, where people think that in this scenario, I don't have choice. I'm doing it for the better good of the organization or of the broader community. And then they start riding the tiger, in the sense that once they are part of it, then they can't come out. And this riding the tiger, sort of a word that was coined in the letter allegedly written by the, sort of promoter of, Satyam, right? So where I think he talked about concept of riding a tiger, where it was difficult to get off without being, eaten. So this concept is very interesting, because it's not just the one person who is riding the tiger. In most of the cases, you would see that there are multiple stakeholders who are riding the tiger. So once they are part of a scheme, initially for whatever reason, where we call as I have no choice, but after that, I think, sort of it becomes a kind of a process where people are not able to come out of that process, thinking that if they now raise any issue, then people will ask, what were you doing earlier? So that's the dilemma a lot of professionals face when, for a particular quarter, people start with the thought process that, oh, it's not material, let it go, otherwise the company will not survive, or whatever will happen. And then slowly that becomes, initially it starts with say $10 million, it becomes $100 million, and then $200 million, and then finally maybe more than $1 billion, at which stage then it sort of explodes, and then everybody is then riding the tiger. Then fence sitter phenomenon, explained detail in book. Then technology, and this I'm covering in detail in this session, so I'll come to that. Then deciphering the cipher, which means that cipher is a concept which I think is used in a lot of investigative and detective, sort of novels, as well as sort of cases, where you need to understand the patterns that are there in a particular document or a particular sort of a device to understand the real meaning of it. The same thing applies in a forensic scenario, where you need to understand, say, for example, if a different voucher number pattern is used for hiding a particular set of inappropriate transactions that are happening, or if there is a round tripping happening, what is the keyword that is used to manage this entire process, because whoever is doing the fraud, if it is a large scale fraud, they need to again have a control over the fraud. Otherwise, they would not know who else is aware of it. So they would use some ciphers to control that process. That is what you need to do. So you need to decipher that cipher. So then no fraud to no fraud, which means that normally people start with the concept that, oh, this cannot happen to me, and this cannot happen in my company. We don't believe that there is any fraud in our company or in our setup. Now that is something that needs to change, because you need to know what frauds can happen within your organization or within your ecosystem. Then only you will be able to tackle fraud. Today, I think there will be rarely any scenario in a large organization where there will be a zero instance of fraud, because something or the other will be happening, considering the wider definition of fraud that we now have under the Companies Act. So all this is covered in detail in the book. I would recommend you take this book as well as refer to others who want to understand about how things have evolved over a period of time. And Anil covered that in a very simple way, how things have evolved over a period of time in India over the last 3 decades, both in terms of frauds as well as the modus operandis and then the investigation methodologies, including now we are focusing on predicting fraud using analytics, using AI, ML, deep learning, and through those methods trying to predict fraud and not just detect and then investigate frauds. So I'll move to, and we can take questions later. So I'll move now to so some of the updates from the recent environment, again covered in detail in book. So I'll be covering a gist of this. So what is happening in the current environment? So this is the outcome from the recent survey conducted by Association of Certified Fraud Examiners US, and they have said that these are the top fraud scenarios in the corona environment over the last 1 year. So 83% increase in cyber frauds, and which I'm sure all of us are also experiencing in India. Then unemployment fraud. This is very interesting, wherein when they call unemployment fraud, what they mean is that there is so much of demand for resources in the current environment that the recruitment frauds have increased. And also on the other hand, we are finding that employees are kind of doing frauds on their organization by working with more than one organization. So, and it's very, I think, interesting in the current scenario. Earlier also it used to be there, but in a very limited way, because people had to come to office to work. But the moment this entire concept of work from home became a long-term solution to the entire COVID problem, what people started doing is, let's say you are in a IT company, so you take 2 jobs. So first job is in a morning shift with company A, then you attend interview with another company and they say that I'm comfortable with a Europe shift, and they will take a second job where they are doing the Europe shift. So in the morning they are working with company A, and in the afternoon until late evening night they are working with company B, drawing 2 salaries. Now nobody will come to know about it, because they are not supposed to come to office. They are operating most likely from their hometown, home village, etc., and they are easily working on both. Now there is a huge risk, because they have access to 2 companies' data at the same time, and probably more than 2 customers' data at the same time. And this is happening, I'm told, at a quite a rapid level in the industry, and not just IT industry, but also in financial services and other industries. Then fraud by vendors and sellers have increased.
One question over here.
Hello.
One question over here. If the person is working in 2 companies or 2 part-time job or like this way, what is the risk involved in this?
What is the risk involved? There are multiple risks involved over here. First is that generally in these companies, you are dealing with quite sensitive data. So let's say you're working with a financial services company. So if you are dealing with 2 banks, financial data. So that's the first risk that you are carrying. Same with the IT companies. Second thing is it's unethical to do that. So if the person is doing this, then what is the guarantee that the person can't do 5 other things, including data thefts, etc., etc., etc. So the risk is huge for the organization, because they are giving access to very critical, sensitive data to an individual who is doing double jobbing. And this could be the starting point of how other frauds would perpetrate over there.
There is a request, anybody interacting, just put on your video, mention your name and qualification, so everybody will understand the context properly for appropriate interaction.
Okay. So basically it's an integrity issue.
Absolutely.
Okay.
And plus also risk of your data being shared, right? Because normally in a normal scenario, let's say you have an employee, right, working back with you. Would you want this employee to, sort of share your data with another employee of another organization?
No, that is.
But he's doing that because he's also employee of another organization. So the risk is, pretty high over there. And right now, I think it is a issue that all the services companies are tackling in a major way. Then fraud by vendors and sellers, this has increased substantially. I think, Manoj, how do you want to do it? You want to reserve the time later for questions, or you want me to?
Later we'll have open house. Now we have Dr. Rajendra Ganatra, and he is a CEO and rich experience in this field. I would request him, Dr. Ganatra, share your thoughts. Any issue, we can have an interaction. I think we can't hear you.
I'll not share my thought. I'll seek to enhance my knowledge by asking Mr. Sandeep. Sandeep ji, do you want to have open house afterwards, or I can raise a couple of things which you can consider?
Yeah, so I think what I would do is preferably in the end, because some of these questions that
so Manoj ji, we will do it in the end.
At 12:30 we have an open house for everybody.
Correct.
And of course, key issues, anything important, we can always welcome.
I'll put my question in the chat box, which Sandeep ji can.
All the issues in the chat box should also be addressed. So there is an appropriate flow. And as usual, anybody like earlier, I think Rakesh spoke. So put on your videos, mention your name and qualification, so everybody will know the context, and everybody will get appropriate response either from the presenter or for the many other experts also present who may also supplement or give their views.
I'll just add, Manoj ji, a couple of quick points for Sandeep ji to consider. He might be considering. First, if you really look at the credit market, the banking sector, the private placement of debt.
Yeah.
The diversion is phenomenal. Our recoveries are less than 15%, 13.7%, right? Even RBI website says. Now, vouchering will be perfect. How would you discover that fraud? That's one thing. Another thing in stock market, digital, everything is digital. I find in any number of examples of unauthorized trades, and they just do a facade of compliances, with the SEBI guidelines, and then they keep on cheating, and we keep on giving our reports as the, investor grievances resolution people for the last 9 years. So try to add these also in your presentation.
Also, I would mention we have many board members here. Mr. Robin Banerjee has already joined us. We have also somebody from the Reliance Group. And feel free, this is an interactive session and all perspectives will be considered and addressed appropriately. Yeah, Sandeep, carry on. We have many board members here. Looking forward to discussions and also the result reviews also of Reliance and Hdfc Bank, Bajaj, Tata Group, many. And we do it within 24 hours, deep dive analysis, all perspectives. Yeah, Sandeep, carry on.
Yeah, thanks. So we'll address the questions. In fact, in the book, just to sort of put in perspective, Doctor, in the book we almost have devoted 80 pages on the frauds within the banking sector, how they happen, why they happen, and how those should be addressed. Because in terms of value, that's I think the highest value in the country. So there is a lot of, I think, details that we have covered, including several case studies of how these issues happen. And there are very, common factors that every time come up whenever a large, fraud is discovered in the, corporate scenario, especially where the loans are, defaulted or siphoned out. So that's covered in detail. So I'll cover some snippets in the next few slides, but in the book, it's covered in very, detailed manner. So then frauds by vendors and sellers, these are increasing because of the supply demand scenario. Where the demand is higher and then the supply is lower. So you have this concept of emergency purchases that has come up almost every day. There is some emergency purchase happening, and sometimes it is genuine and sometimes it may not be genuine, where people are taking advantage of the situation, coming back and saying that we have no choice. If we don't say, for example, buy from this vendor, then the material is not available in the market, and then we may not be able to complete our sales and fulfill our customer requirements. So we have no choice but to buy at this rate. And there are again deals happening in the back end between the people in the company as well as with the vendors. Sometimes it is only by the vendors, sometimes it is in a combination with vendors and then the company employees, including sometimes senior employees. But these frauds have increased substantially. Then payment frauds that all of us know how I think this is happening, right from phishing incidents that are there where I think the bank account details are getting changed in between as the transaction is happening, to people collecting data through social engineering from different individuals. And this has become a big issue now across the globe, including in India. And both, I think, if you combine the payment fraud and the identity theft, you would find that the number of instances are increasing. And there are actually rackets now operating across India, where people are collecting data from channel partners, from intermediaries who have access to a lot of data, collating that at one place and then reaching out to the customers of those companies, banks, financial institutions, e-commerce companies, etc. And with specific data of what transaction they have done, and based on that they are trying to get additional information which can help them to defraud and siphon out funds from their accounts. So this is going to be a big challenge, especially at the common citizens level and also at the corporate level. In spite of all the awareness that is created, phishing incidents are still happening, wherein the bank accounts are getting changed in between through the email communications, people creating very convincing alibis and then changing the account details and transferring the funds. I mean, people may think that it is not happening, but every month we get a couple of requests for those investigations still. And this I'm just talking about us. I'm sure if you look at the country level, there are so many such cases happening. So what is happening on the governance front? So while I think a lot of these are happening, and generally I have seen that people feel that the regulators, enforcement agencies, etc., are not up to speed. At least my experience over the last few years is the regulators and enforcement agencies in India have upped their game substantially over the last I would say a decade, but especially in the last few years, with extensive use of technology, changing the regulations based on the learnings that we have, and not waiting for 5-10 years. It's changing very fast, and also equipping themselves with all the tools, technologies, and skill sets that are available for investigating these cases and bringing culprits to the book. So it's a substantial change. I'm sure all of us may not be happy that it's like at the level where we would expect it to be, but I can tell you that because I have been working with the agencies for more than 2 decades now, what I have seen 2 decades back to now, it's a substantial change. And especially in the last 3 years, the way they have adopted to technology, the way they have adopted to making changes is amazing. And these are just some examples of how different agencies, whether it is SFIO, Enforcement Directorate, CBI, then Competition Commission of India, you would find that every day 2-3 cases are reported in the media, right? Of large cases I am talking about, because I'm not even talking about smaller cases, because nobody even reads if somebody talks about a fraud of 20 crore, 30 crore, 40 crore today, because all are running into few hundreds and few thousands of crores. So every day you will see 2 to 3 large cases being reported, including examples of people, including willful defaulters, getting arrested, which was unheard of in the earlier scenario, but that's happening rapidly now. And I'll discuss with you how we as professionals need to be aware of this, and how it impact as well as help us in the next few minutes. These are again more examples, and this is happening across geographies, across industries. Plus they are very smart in terms of how they are collecting data. Earlier they would ask for hard copy of data, they will search for hard copy of data, but now they know that most of the transactions, especially high volume, high value, are happening through the digital modes. So they are also seizing laptops, seizing email data, server data, mobile data, and analyzing that in a very short time frame to come up to evidence of what was happening behind. Again, it's not that all issues are getting covered. Obviously there are so many issues that all may not be easy to cover, but the strategy that is being adopted is to pick up high value, high profile cases and take them to a logical conclusion, so that you are able to set the example in the society and in the corporate governance scenario. Similarly, a lot of effort being put in by SEBI, stock exchanges and others. Lot of, I think, sort of issues addressed over the last few years. Regulations have changed. Now there is a set of people who think that the regulations are, more cumbersome, very difficult to, implement. At the same time, there are several others who are very positive about these changes, because that's removing the asymmetry of information that is available to certain set of people and not to all the other, investors in a particular, organization. So the changes that have happened with regard to, say, the insider trading regulations, or the reporting on frauds, forensic audit, or on reporting of related party transactions, or the rules around independent directors, all those are changes in the right direction, which is also helping unearth a lot of these cases much in advance than what it used to happen earlier. The bounty that was changed for the insider trading reporting from 1 crore to 10 crore, that is also helping the regulator get a lot of leads on the insider trading, where earlier it was almost impossible to detect such cases. And that's an example I want to share in detail, where I think there is a good effort being done by the regulator to identify abnormal trades that are happening in the market on a regular basis, pick up high value examples from there, and trace back if those are being done based on insider information. And there are a lot of now, I think, cases where they have been able to successfully do that. So in summary, the regulators, the enforcement agencies, the market regulators, SEBI, all of them have substantially improved and are in a different trajectory now than what they were in the earlier era. Plus, the coordination between agencies is also at a different level, wherein earlier the data sharing was very limited between agencies, but now it's very fast. There is an understanding of how data needs to move between agencies, and it's moving in a very efficient and effective way. So that's the summary of how it is happening. I work with again most of the agencies, so I know exactly how they are improved over a period of time, and kudos to them on how they adopted technology over a period of time. Now, if you look at just a couple of examples on reporting of frauds and then forensic audit, so this, I think, initially it had a very different reaction when it came in, but over a period of time, after I think SEBI clarified on what is the intent of these regulations, now I think people have understood the benefit of this, and then now I think the reporting is also started. I would say that it's still not at a level at which it should be, but the reporting has started over here. Now here, as professionals, we can add a lot of value, because there is a lot of determination that is required in terms of which frauds, how is the materiality threshold determined, what kind of forensic audit needs to be reported, at what stage it needs to be reported, how do you sort of make sure that the sensitive confidential information is not, I think, sort of in public domain, still the purpose and then the outcome is reported. All that, I think, is clearly defined, and there are case laws now to address how each of these aspects needs to be taken care of while I think you're doing these aspects. So that can be again a role that you can play, covered in detail in book on how each of these needs to be addressed. Another, I think, development over here, initial reaction is it is too cumbersome, but again, I think if you see the effort, it is in the right direction. So effective April 1, 2022, the BRR is replaced with BRSR, which is Business Responsibility and Sustainability Report. And here, besides other elements, there are 500 elements that needs to be reported under this. So I'm not covering that over here, and a lot of focus on the ESG side. I'm covering the governance aspects. So now the companies, top listed, 1,000 listed companies, which cover almost 85 to 90% of the market cap in any case. So here they need to have anti-bribery, anti-corruption policy, which needs to be sort of provided on the website. Then if there are any complaints that are received against the KMPs and any disciplinary action taken against that for corruption needs to be reported, especially if the action is taken by the law enforcement agencies. Similarly, on conflict of interest, if there are complaints received against KMPs and directors on conflict of interest, those needs to be reported, and action that is taken needs to be reported. On the antitrust side or the competition law side, any action taken needs to be reported. Cyber security, which is very critical, and this also takes into account the earlier examples that I talked about, the data thefts and also the dual employment, wherein if there are any issues around data security, data privacy, those needs to be reported. So what this will do is it will indirectly require companies to put in processes, systems, and procedures in place to address this proactively so that they don't have to report in the BRSR report that there are violations and exceptions in these areas. So a lot of, again, I think effort over here. It will definitely require effort is done by the regulator. Now it will require we as professionals as well as corporates to put in equal effort to implement this. The first report for most people would be in September 2023, because it's for the financial year 22-23. So we have time, but we need to start working on this immediately. So to summarize, what's happening in the current environment is a lot of people are still under pressure, a different kind of pressure, because there is a lot of competitive scenario over here. Generally, people have been doing well over the last 4 or 5 quarters. Now there is some pressure that is developing in the environment. So there is pressure to meet the targets, meet the numbers. So there is, I think, potential manipulation of KPIs that might happen in the current scenario in order to present the better picture or the expected picture. And this can happen not necessarily just in the financial scenario, but also on the quality parameters, on the production parameters, and other parameters that are there. Accounting frauds generally in the history shows that in this scenario where suddenly there is a growth and there is sort of some plateauing happening, there would be, I think, issues coming out in the next 2-3 years on revenue recognition, round tripping, inventory manipulation, etc. So we need to be watchful about that, and I'll share a couple of examples on this in the next few slides. Then acquisitions becomes the flavor of the season. History again has shown that you need to understand what is the logic for that acquisition, because sometimes it may be of no logic, but just to either rotate funds or to sort of create hype that acquisition is done, not adding anything of value to the business. Onboarding of resources we already discussed, because it is impersonal, digital selection happening, a lot of frauds happening over there. The person who is giving the interview is different than the person who is actually joining the company. A lot of those frauds are getting detected because of this scenario. Of course, there is effort that is happening by corporates with the help of sort of forensic resources like us to address this proactively. But I think I would say that still the issue is prevalent at a very wide level. The new employees carrying data from previous employer. Normally, I think we think the risk of our data getting it to the next employer, that is the risk normally we track. We don't track if an employee who is joining us has carried sensitive data from a previous organization or previous employer. And there have been now cases where the courts have reprimanded the organization for not taking action where they detected that an employee has carried data from a previous organization. So now what happens is this employee comes into the organization, carries confidential sale, R&D or other data from the previous employer, wants to establish himself or herself faster in the new organization, shares a lot of data and earns a lot of brownie points. Others also think they are very happy this guy got the data, but later when it gets discovered and the case starts, then they are not able to explain that why they didn't stop using this data and why they didn't take action against this employee, because he was carrying data from the previous organization. And in fact, if you read all the large companies code of conduct, ethics and similar guidelines, it will specifically prohibit that you shouldn't do anything unethically, anti-competitive, etc. But then when these are shared within the organization on emails, on chat box, etc., nobody raises any issue. When I say nobody, I'm not generalizing. There are some people who raise it, but several others who don't raise it. Then cyber attacks have increased exponentially, and the new trend over here is there is an industry-wide impact. And if you see what is happening again with a large organization in the last couple of weeks, they had the data, they asked for a ransom was denied, and they published the data across the net over there. In earlier case, for a different organization, the data with regard to your purchase of pizza, etc., and all was available in the public domain, because again there was a cyber attack, there was a negotiation that failed potentially on the ransom, and then the data was available in the public domain. Now that will create a different complication, because it will put onus on the company to address those issues, and there may be legal complications going forward post the BRSR report, as well as once the data privacy bill becomes a law. Then data theft through work from home, we discussed I think earlier. Increase in down rates by the regulators. So this is again a new trend. Earlier it used to be only in income tax scenarios, but now it's across. And in 2018, the Prevention of Money Laundering Act was amended to include Section 447 of the Companies Act over there. So and in scenarios where the registrar of companies or MCA think that there is a money laundering angle, they can, I think, report it to the ED. That's why you see in a lot of cases ED getting involved over here and doing investigations under prevention of money laundering law, whereas earlier it was primarily around fraud and willful default by the banks. Sorry.
Anyway, take care.
Requesting everyone to be on mute, please. Thank you. Then insider trading. So this is a significant issue. I think somebody also talked about this earlier. It's a significant issue all across. In some way, it is getting addressed because the organizations have been made responsible under the new law to implement very robust policies, procedures, databases, and monitoring mechanisms to address this. So it will get addressed in some manner. But if you look at it from a practical point of view, for somebody to sort of do insider trading or share information, it's just 2-3 information that is required, which can be just sort of visually seen and then communicated through a different channel, which is not tracked. So it's still a big challenge, but again, efforts and the journey in the right direction. So the regulators are, I think, very active, and they are shifting the onus on the organizations, on the corporates, on the professionals, on the independent directors to do enough to prevent such instances. Otherwise, they are also being pulled into the process. So now I'll move to some examples that we have covered in detail in the book, but I'll cover a gist of it. Like Anil, I think, covered earlier, we are living in a digital environment today. Most of the frauds happen using technology. At the same time, I can tell you that having investigated this over the last 2 decades, the underlying modus operandi remains the same. They also just use the available technology, and they are able to do frauds in a much simpler way now than what they used to do earlier. But the methodology in terms of what fraud is happening and how it is happening, it broadly has remained the same over a period of time. So what has technology done is technology has helped all of us. And today, I mean, this session we are able to do at the comfort of our respective homes or offices, which was not feasible 10 years back. It was difficult to get people together. We all used to meet in a sort of a particular place and then do this discussion, but we are all doing now. Last 2 years has also taught us that anything can happen sort of remotely, which was not the understanding earlier. Earlier, probably only 10 to 20% of the activities used to happen remotely, but now everything is happening remotely. What technology has done substantially to reduce fraud and corruption is wherever technology has been implemented to reduce the interaction between the decision maker and then the citizens or the receiver of the service, the frauds have gone down and corruption has gone down by 95%. So let's take a couple of examples. Train tickets, all of us remember how much fraud used to be there in the issuance of train tickets earlier. Once it became online, then I think it changed completely. Vidya, can you go on mute, please? Or whoever is there, sorry. So now it has gone, I would not say 100%, because there are still some frauds happening, still people using some sort of algos and then some tools in order to bypass the system, but that's only to the extent of 1 to 5%. 95% of the fraud and corruption has come down. IT returns, all of us know how the scenario was earlier, how difficult it was to get refunds, but now I think that is all gone. The bot in the back end is deciding which officer will review which return, who will do which scrutiny. Most of the notices are coming online. Even your responses are supposed to go online. So you are not interacting with any officer at all, and then your returns are getting processed and your refunds are getting processed. So those are just 2 examples. There are several other examples where implementation of technology end to end has reduced corruption, has reduced fraud substantially. It has also helped in the current scenario using GPS tracking, geotagging, etc., reducing the frauds that used to happen earlier. For example, a truck is sort of taking our material. Was it stopped in between? Was some material taken out in between? You can track. Was it taking a route different than what it is supposed to take? You can track. Is your cab guy charging you higher than what they are supposed to charge? You can again track. It's also a security thing that you can do with that. Of course, I'll come to you how people have misused it, but broadly that's the way you are able to mitigate the frauds. Similarly, geotagging, you want to confirm if an employee is actually there in that location, if a borrower is actually operating from the residence which he has given as his permanent residence, etc. You can do through geotagging. So all these technologies are helping deliver services faster, but at the same time reduce the frauds. I will not say it's zero because I'll give you examples, but it is reducing the frauds. It is also helping investigators crack cases faster because you are able to identify the entire trail that is available. There are logs that are available provided they are enabled. So it's helping identify the evidence faster, including, for example, when we used to do the money laundering investigations earlier, it used to be a cumbersome process because we used to get different bank statements in different, sort of hard copy formats, PDF formats, etc. And to trace a transaction end to end, it used to take days together. But I did an engagement with the government couple of years back, where we covered multiple money laundering scenarios, and there are millions and millions of rows of data, but we are able to get the data in a standardized format, run the analytical tools, and identify how the funds were being round trip, including taking outside India and bringing it back into India, establishing connects between the remitters, the receivers, and then again the remitters from outside India, and then receivers in India, and then the two receiving accounts in India. So that is how I think technology is helping you in this scenario. Having said that, the technology is also a double whammy, in the sense that if you don't understand the nuances and the background and then the underlying architecture of technology, you can play over-reliance on that and may end up with frauds, because people who are using the technology on a day-to-day basis, they will understand the loopholes that are there, because some transaction will happen by mistake and they will understand that, oh, this can happen, and then they can start using that for their personal gains. Couple of examples over here. In one case, and it's in public domain now, in a state in central India, where they had a online auction e-bid platform for all the government contracts. It was one of the first state in India to do it, and that platform was operating a bit slowly. So they appointed a third party to improve the performance of that e-bidding system, and they were given admin access for that. Now after that work was over, that admin access was not removed, and they continued with the same access and same password after the project was over as well. So this entity had access to the data on the platform. It had live access to the bids that were being made, and they tied up with somebody to share that information, and that person was continuously, or that entity was continuously winning the bids. And that's where it raised an alarm. And then when they dig deeper, they found that, oh, this is the mistake that we did, and because of which the information is being leaked out. So you need to understand that the technology also has a loophole through the sharing of passwords, which needs to be understood. And then how do you control that process? Duplicate payments. A lot of us get into a comfort zone that, oh, we have implemented ERP. So now once we have implemented ERP, duplicate payments cannot happen. But that's a misnomer, because in a ERP also there are limitations. If, for example, in some ERP you put an extra space, it will not identify as a duplicate payment because there is an extra character over there, and then it will process. Or you put a special character, it will process. Now some people understood these gaps, and they started addressing those gaps. So like some ERP now doesn't allow you to put special characters in the key fields, doesn't allow you to put space in the key field. It will not allow the transaction to get processed. Now people understood that control, but they also understood that that control is implemented only within a quarter or within a financial year. So an invoice that is received in February is again presented in May, and then it gets processed. So you need to understand the gap that is there in the system to prevent frauds from happening within that ERP system as well. Electronic weighbridge, when they were introduced, everybody thought that fantastic. Now nobody can manipulate, but you can manipulate it from the back end. In one case, we saw that if you place the truck on the center of the weighbridge, it will weigh 100. If you place it on slightly on right, it will weigh 110, slightly on left, 90. So when goods are coming inside the organization for purchases, they are placed on the right, so it weighs 110, which is 10 more. When the scrap is going out, it is placed on the left, so 90, which means you are getting money for lesser scrap than what is going out. So that's again a classic example. Digital lending is the fad right now, but again what people are doing is digital lending operates based on a preset parameters. You get online approvals for the loans. So people are building up their profiles, taking those loans, and then running away. So you need to understand again what is the gap involved over there. There are several other examples which are there again discussed in detail in the book. But in summary, for the benefit of all, and then in the interest of time, you need to understand the gaps that are there, including in the newest technology that you have implemented. Then only rely on that. Have alternate controls to address those gaps and not blindly rely on those gaps. You may have CCTV implemented and you are blindly relying on CCTV, but in 9 out of 10 investigations that we do, when you need that data, you find that that data is not there because it gets overwritten within 15 days, or the CCTV is facing a different side, or the area where the issue has happened, that particular CCTV was not working. So that's again a classic example that we have seen in cases after cases. So this is a case example of how funds are diverted. In 8 out of 10 cases in India, a similar methodology is used to divert funds that are obtained either from investors or from the bankers. So initially it all starts with in a particular quarter or in a particular year, you need some additional funds. Now you have exhausted your limits through the normal route. So let's start with a couple of methodologies of how this is used. So you create related parties who may not be technically falling under the definition of related party as per the Companies Act or as per the SEBI definitions, but they are all sort of your ex-employees or current employees having organization started for this purpose. So you create a fictitious purchase transaction first, where there is a transaction on paper, the money is flowing through the bank, but there is no real fixed asset or the material that is coming into the organization. So you take out, let's say, 100 crore out of the organization in this manner. Then you create a dummy sales transaction on the other side, and through that method, what you do is that you receive payment from this entity. Then if you dig deeper, you will find that the entity to which you made the payment, that entity has transferred the funds to the entity from whom you have received the payment, and that is how you are able to enhance your turnover and show a higher borrower limit to the bank. So that's one methodology through which the funds have been diverted, and then funds have been sort of taken out from the system. The second, which is I think a classic scenario which has evolved over a period of time, is the letter of credit fraud. And you can use different terminologies for this, and there are slight variants. There is normal letter of credit, there is LOU, there is SBLC, etc., etc. But broadly speaking, the methodology is similar. So what people do is that they go and reach out to a vendor who may be a genuine vendor and tell them that we'll give you an order. You confirm that order, and this order will be against the letter of credit. So fine, you have exhausted all your fund-based limits, and now but you have non-fund-based limits. So on the day when the payment is supposed to happen to this vendor, you default. So the LC is devolved. The banker is required to pay that amount to the vendor, and there is arrangement with the vendor that the vendor will pay back that amount to you in cash, and there is no real transaction that has happened. Now that money, through various methods, you'll bring into the system, either to pay the installment of the bank or use it for some other purpose. So the non-fund based limit that you had, you converted into technically a fund based limit, and the banker had no choice because this has devolved, so they need to sort of make this payment. Now our understanding is all this started at some point in time with the understanding of probably the corporate as well as maybe one of the banker, where there was a sort of a effort on both sides not to let the account get into NPA. So once the market got the idea, oh, this can be done, then slowly it started getting used for all other purposes to generate funds. So if you look at it, any case that you see of siphoning of significant funds from the banking system in India, in 7 to 8 such cases, you will find that substantial funds have been sort of taken out through this method, the LC method, the capex method, through the related party method, in most of those scenarios. Then of course you can call it SPV method, which is again, I call it as again related parties, to extend that at some point in time in the infrastructure industry, people used to value the company based on the order book, not based on the cash flows or the EBITDA or the PAT. How the order book was generated was company A will receive an order from, let's say, customer X for 100 crores. Company A will give it back to back at 99 crores to, company B. Company will give it to company C at 98 crores back to back. Now all three of them are recording this as turnover. So for the industry, it became a 290, sort of 7 crore turnover against a 100 crore real turnover, and people are funding based on that, by the way, right? So
it's a wonderful
I think,
chart and wonderful example and real life example, and hundreds and thousands of companies are doing this. A wonderful chart you have shared. We'll be having a extensive discussion on this after 12:30.
Sure.
Wonderful.
So
Yeah,
I have now, I think, just 5 more minutes, Manoj, to present, and then we can open the floor for
we will discuss a few companies, real life, and then many people want to speak on your wonderful presentation.
Sure. So now I think, just as sort of investors, professionals, directors, etc. So what we need to understand is there are some red flags that any organization or any scenario that throws out over a period of time. What has happened is, like we have covered in detail in the book, we all rely on others, words or trends or broad feeling, personality, etc. But if you dig deeper and focus your efforts rationally on the data and the science that it is giving, it will help you understand, that there is something wrong that is happening. Not to say that if you find one red flag, you should start, I think, raising alarm. If you see more than one red flag, especially 2-3 red flags, then you need to start raising the alarm. So where you find that operating margins for a particular entity is significantly different, higher than the normal industry trend. Now somebody may say that, oh, my company is different, my sort of organization is different, but unless you have done a proper research, don't reach that conclusion. High trading component of the overall business. So where companies are having high trading component, you need to assess whether that is genuine, because that may be a method to just enhance turnover, show better picture than what it is. Requesting everyone to be on mute, please. Or maybe Manoj, you can mute from the back
end. Each of the red flags are very, very important, and they are operating in many, many companies. It's a good short list you have made. Of course, there are many more, but really,
I mean, there are like in the book, I have covered close to about 150 red flags just on procurement.
Wonderful. Then your book is indeed steel. And these red flags are also happening in the companies coming out with IPOs.
Yeah, that's another angle. So because a lot of, I think, there's lack of understanding in terms of how it works for certain categories of companies. But I guess I call that water will ultimately find its own level. I think the understanding will get developed over the 3-4 months in terms of how things work in certain types of organizations.
Sandeep, you need to do a series of sessions so all your 150 red flags come out over the next 6 months.
Yeah, so what I would recommend, first thing is, I think that was the effort actually that we did to share the knowledge. So I would request everyone to, I think, have a look at this. Plus also, when you find that it is good, share with a broader spectrum of people, because the idea was that all of us should increase awareness all across around us on how these things happen. Then only we can prevent. There is a specific chapter that we have covered on ethics and integrity, which is actually a steal from a training point of view, because unless you increase the ethical environment all around us, these frauds will continue unabated for times to come as well.
Many members of the ethical standard boards are aware of today's program, and some of them are attending and would be looking at it extensively. In fact, they need to contribute a lot, because it's all a lack of ethics or divergence of ethical standards which compel people to even think of doing fraud. It's always a temptation to get rich. One will not be caught, or some innovative thinking.
Correct.
But ultimately, there is a smart professional like you and many other participants always looking at red flags and catching them. So ultimately, they have to devise new ways, but most of them get caught over a period of time and they pay their price. Or people say you are a spiritual person, so money which comes easily ultimately doesn't remain, it goes away.
Correct. Absolutely.
So excellent. And Santosh, you are here? Santosh?
Yes.
Yeah, Santosh, can we have a short incisive 360-degree view on Reliance results, Reliance, Hdfc Bank, and we'll do a few of them. And then we come to a interactive session on so many red flags which have been raised.
Sure. Just let
First, we start with Reliance, the biggest, and they claim to be the best.
All right.
Best in accounting and innovation. Certainly, they deserve the honors when people prepare shortlist.
Let me just share my screen, and while I do that, I must say, Sandeep, wonderful session, full of examples and anecdotes. The one which I, particularly, when you mentioned in the current scenario where things are, businesses picking up, capital market is, kind of buoyant. I think this is a very fertile ground for frauds. I think that's, you mentioned that and fully agree with that. So with that, so Manoj, is my screen visible?
Yes, it is.
Yeah, it is clear. It is clear, and incidentally, Reliance has come out with wonderful results and trying to convince the stakeholders over the weekend that most of the divisions, all the divisions have done splendid performance on a Y-to-Y basis. Of course, last year there were many more challenges because of pandemic, but firing on all cylinders. Now we do a deep dive into each of the segments.
I think someone wants to speak up. Someone.
No. So I'm Jayesh Gandhi. I was just mentioning, Sandeep, thanks for the excellent, presentation. And one key thing is that everything needs to look at, how ethically one is, operating. I think that's a key point. Thanks for everything.
Well said, Jayesh. Well said.
Yeah.
We continue doing deep dive and wonderful red flags. Jayesh, and you also, we want you to commit so many sharing experiences in the future regularly. So all aspects are brought to the world. India is the best growth story, #1 in the world, in not only in each of the professional issues, and setting benchmarks to the world in terms of best governance and best board practices.
Sure, Manoj. Sure. Thanks.
So on Reliance, the results, the December results are currently on the screen. Basically, the income, this is the consolidated financial results that we are looking at the moment. The top line, it's 1,91,271 for the current quarter, vis-a-vis previous quarter, that is 1,74,104 crores. So significant growth at the back of a lot of, and of course this last quarter, this December quarter is generally festive season. So one of the things that generally contribute to increase in sales of companies, and we will also see Hindustan Unilever in a few minutes. We will also so this is the time that many of these consumer related companies do well. Reliance within its various businesses also have Reliance Retail and Reliance Platforms. So, and as we all know that during the work from home scenario or during the lockdowns, the demand for OTT platforms and therefore the geo connections have only increased. The demand for Wi-Fi's at home and fiber optic. So there is a significant growth in the business. In terms of the bottom line, there is again a increase. So if I look at the PBT, the profit before tax, 25,000 crores vis-a-vis 19,000 crores last year. Annually, it is, just to put things in context, annually it is the PBT is 55,000 crores. So they have, in terms of profits, they have on a YTD basis already exceeded last year's profits. So 9 months profit for the current financial results is more than last year's full annual profits. Of course, last year, COVID and all had an impact on, companies' results. We will also look at, some of the exceptional items that they reported. various ratios, debt service coverage ratios, interest service coverage ratios, obviously very impressive. Current ratio, slight decline as compared to last quarter, but still quite, healthy.
There's an exceptional item about 3,000 crores, which is very important.
Yeah. This is that basically the sale of shale gas. I'll come to that. There is a note which they have given to explain that. Let's jump on to that. Yeah. So this is what you're talking about, Manojji. Note number 3, Reliance Eagle Ford Upstream Holding, a wholly owned step-down subsidiary of Reliance Industries, signed agreements with Ensign Operating LLC, a Delaware limited liability company, to divest its interest in certain upstream assets in the Eagle Ford shale play of Texas. While this transaction, RIL has divested its shale gas assets and has exited from shale gas business in North America. This transaction resulted into exceptional gain on sale of assets amounting to 2,872 crores. This is a part of the overall oil and gas segment. This was partially offset by the provision of liabilities pertaining to GAPCO amounting to 36 crore. I think as a strategy, many a times the chairman has also mentioned that, over next few years, they are looking at, more of renewable energy rather than non-renewable energy. We know that this group has invested, billions of dollars in solar, energy, and so all these conventional, non-renewable energy, they are, gradually there is a plan to exit from all these businesses and look at more of technology and look more of renewable energy as such.
Of course, they will benefit in a very big way out of the PLI scheme of the Prime Minister.
Yeah.
And the government. Among the biggest beneficiaries of the PLI, production link incentives, in the new area.
That's right. Other than that, usual notes, of course, we will not discuss that. No concerns in terms of redemption of debentures or commercial papers. Again, this note is there with regards to right issue. The company had received an aggregate under the rights issue post the second and final call from the shareholders as on 31st December 2021. An amount of 113 crores is receivable towards call money. There is no deviation in the use of proceeds. So rights issue. Disclosure.
I think Percy wants to say something.
Yes, Percy.
Yes, sir. Thank you for allowing me to speak. Manojji, I won't be able to activate my video, so please forgive me for that. I can introduce myself. I'm a chartered accountant and I work with an audit firm. To delve into this, could you go to page number 10, note number 1, Santosh?
Page number 10?
Yes.
Percy Irani is a regular contributor to the financial reporting series.
No, page number, the PDF page number 10. The PDF page number 10.
Oh, okay.
Yeah. Before I make this statement, it is without prejudice, with all due respect to everyone. So please do not feel I'm criticizing or finding faults. But
deep dive. You're contributing to the deep dive, critical analysis. That's the objective for this special.
Thank you. Well, the note number 1, the figures for a corresponding previous period have been regrouped, reclassified wherever necessary to make them comparable. Is this note required? Because of this, if organizations start putting this note, Ind AS 8 gets triggered. The principles of Ind AS 8 would get triggered. I have seen TCS and Infosys. These are also considered to be the gold standards in financial reporting.
They also have this.
They don't have this
They
note.
don't? Okay.
No, they don't have this notes. TCS and Infosys, other companies I have not observed, but TCS and Infosys, they don't have this note this year, this quarter, SEBI Q3 quarter. I feel this note should not be coming in the SEBI results, because this triggers the NDS principles, the requirements of NDS principles.
No, absolutely. So I totally agree with you, Percy. And again, no disrespect meant to Reliance in any ways, but I've seen many companies, even large companies give this note in their results, and probably, as a continuation of the past practice under IGAP. But I totally agree with you that, if you look at it from the lens of Ind AS 8, this is absolutely, contradictory, because otherwise you will have to give, a restatement, or you'll have to basically explain why this is, what is the regrouping that you have made, etc. So this is a blanket, note like this is actually not technically correct. But having said that, many companies do, do like it or not, do give this note.
I would like to mention some companies may give the note, but they should not do the regrouping. Sometimes they just put a note, and chalta hai, but they should not do the regrouping, because now many in digital media, the data is captured for consistency, and in that case, it defeats the purpose of proper comparison over short term and long term both.
In fact, Percy, apart from Ind AS 8, even LODR requirements, I don't recollect which regulation in specific, but I do recollect that even LODR talks about restatement, it doesn't allow restatement. So apart from accounting standards, I think also LODR requirements need to be, seen.
Mr. Agarwal has put something on a chat regarding this note. He has experience at the board level also. Mr. Agarwal, would you like to speak on this, elaborate? There is a comment on by him in the chat.
It's a precautionary note. Yeah, Mr. Agarwal, you can of course unmute yourself and speak up. And but then I'll just read it. It's a precautionary note. That is like what Mr. Agarwal says. Yes, but then, so many a times this kind of a note, it kind of confuses people that, whether indeed there is a regrouping or not. And if it's a precautionary, basically they'll have to explain it. So I think
Santosh is like this. What I've seen is it's going on from ages, is a past taking up the legacy, but just whenever it's they may have regrouped it. So they just say figures have been regrouped wherever necessary. It's just a precaution. Mostly nobody does that, but somewhere to take the precaution and be on the safe side, they mentioned this.
Mr. Agarwal, I would like you to share your thoughts, put your video on. You are very, very well known in board circle and with your erudite experience.
No, sir. No, sir.
Yeah, wonderful to have your video on. Yeah, Mr. Agarwal.
Nice to see you, Mr. Agarwal. So, yeah, it's precautionary, I agree. But then what Percy is saying, and I'm agreeing to him, is that basically Ind AS 8, whenever there is a reclassification or a regrouping, the requirement is that you need to explain the requirements, the restatement, what you have done. But having said that, it's a kind of a hangover of the IGAP, the earlier accounting regime. And I agree with you. It's been a age-old practice, and many companies, old long-standing companies have this. It's like a kind of a roll forward of the earlier practice.
What I want to say, this regrouping is in a smaller book. It doesn't have any material effect. If there is a material effect, then they have to report it. So if this is the concept.
If it is not having material effect, sir, then even this note is not required as such, because it confuses.
They're taking precaution.
Yeah, so that's what. So
that's the only thing.
Yeah, if it's significant, explain it. If it's not significant, don't even give the note. I mean, that ideally would have been the But I agree. I mean, many management believe
standard.
that this precaution is better to be safe.
And SK has a board level experience in quite a few Reliance Group companies. Wonderful contribution.
Thank you, sir. Thank you.
I would like to say, if it is non-material, then regrouping need not be done at all.
Yeah.
Right, sir. You're right. You're very right. But still, they take a precaution wherever they have done it. They say they have done it. Suppose they compare with the previous year, it may not agree. Why have you not mentioned it? That is a precaution they take. That is only true for the company.
Right. Well,
Mr. Agrawal, this is Percy speaking. Well, by putting this note, how will someone, including the regulator, come to know as to whether the regrouping or reclassification is material or immaterial? The very fact that this note has come in means anyone will feel that there is a regrouping which has been done, which is material. Or just on the face of it, how will a regulator or any other stakeholder come to know whether the regrouping, reclassification is material or immaterial? That is my question. And the moment you put in this, note, the moment you insert this note, mention this note, the requirements of, I'm just repeating, the requirements of NBS 8 principles become applicable.
You're right, sir. You're right, sir. You're right. As I told you, this is a precaution a company takes it. And suppose when you compare some figures from the previous year, and if there are wide differences, right, a huge difference, then anybody can question. Then you have to explain. But mostly, if you see, there are not much divergence, not major differences. If there's a reclassification, everything has to be reported. But minor ones, they do it here for the convenience. That's the only.
So, by the way, Percy and Mr. Agarwal, in fact, I recollect even the FRRP in February, the FRRP, the Institute's FRRP had come out with a report on common errors and disclosure deficiencies in India's account, disclosures from live companies. And I think I recollect that this was one of the points that they observed also, that, you cannot have this kind of a note. I think that's another thing that, came to my mind.
Right, so this is what is happening is they're comparing with the index. So say that you should now go by the index. So if still the companies have not adopted that, but change will come from the next year because of the regulatory coming in, they don't want any panga. So they will change it from the next year. The thought has started.
Right. Okay, anything else?
Thank you for allowing me to speak. Thank you very much. Thank you.
Percy, any more important points you have noticed? It is very nice you have gone through the details.
Nothing in relation to this except for this discrepancy which came to my observation.
Very good.
Good observation. Good observation.
Good observation.
There are lots of things, particularly segment analysis, because we have been discussing this Reliance Industries being a leading company with a significant market cap and also growing significantly year to year, particularly in pandemic. In the segment analysis, we see various businesses and the consumer facing and digital businesses. There is a significant pie of business now. And important thing which comes out on a YOY basis, the digital business, including geo platform business, has performed below the growth rate of the company on console basis. And on a net profit basis, also the growth is below 10% when companies are growing at over 15 to 20%. Even as per the projections of most of the financial foreign institutions, EPS is expected to grow over 20-25% in the next 2 years. So the geo business, digital services, the YOY growth in net profit and also sequential growth in net profit is below expectations. Although there is a big noise on ARPUs going up because earlier there was a lot of competition and ultimately all the three significant players increase the ARPU, but it is not flowing in the bottom line. That is a point of actual concern. What will be the future growth of the digital business? And is it an investment phase? It is a phase of yielding results. Another point is also the depreciation policies, particularly of the digital business. The way the depreciation and amortization are done, are they done over a short period because technology is evolving? This company was known for initiating this unit of depreciation method, which ultimately they can write off depreciation over a very, very, very long period. So because of that, although they claim to be very high EBITDA in the digital business, but the net margins are quite low. Ultimately, net depreciation is the actual cost. It is not a power plant which can transmission tower which can last for 20 years and refurbished it last for 45 years. This is a changing technology. New development is coming. 5G will come. Satellite transmissions, satellite broadband is also coming. Lot of innovators in abroad are coming out with high technology. So the segment is important. Retail, they had advantage of low OPEX because of pandemic and Y2Y. Low OPEX applies to all overheads. And of course, will it sustain or OPEX will again increase because opening up of economy for 22 is starting off in a big way with a near normal situation expected from June quarter as far as retail is concerned. So whether it will sustain, of course, new stores are happening. It takes time for them to turn into profitability. But very important points on this unit of depreciation method and amortization. Yeah. Any other point before we go to the next company?
No, absolutely. I mean, I agree, Manoj. I mean, this retail turning, one of the few companies which has made retail business, profitable. So I think largely, as you rightly, analyzed based on, the lease rental, the COVID-related, concessions that, they, had, and I think many lease agreements they have actually now, entered into revenue sharing agreement rather than a fixed, committed monthly rental. So that is again something which contributes to the profitability.
And even for the old revenue sharing agreements, the share of profits of the lesser will also increase significantly. But let us see, good margins and good profits and good growth are good for the India growth story.
But if you look at the segment results, I mean, one other thing is if you add up oil to chemicals and oil and gas segment, and if you compare it with the aggregate of retail and digital service, let's keep aside the financial service and everything else, so retail plus digital is almost, catching up with oil and gas and oil to chemicals. So I think, the new age, the new business is actually basically it's becoming bigger than the old conventional Reliance.
And also important part, last month they made a transmission about transformation and leadership announcement soon. It did not come along with the results. Hopefully it will come because next gen is leading some of these verticals like retail and digital. And of course, this oil to chemical business, this year they had advantage of a bumper performance because of significant rise in oil price. Ultimately, there may be a pullback and also growth in the new sectors, digital and retail. And if there's a pullback, the composition will change certainly in 23 and 24. One more point to note is financial services, a new sector they introduced in the last few years, annual reports, very, very small. But the point is they are showing it. It means it is material, Mr. Agarwal. Yes, segment reporting. It is very, very small. Financial services as a segment being reported in Reliance Industries. It's a very small, but this is a thing, sign of things to come. Ultimately, it will be a material, so it may be significantly. And don't be surprised if it beats the leading players also in the next decade.
Correct. And this change of leadership, what you were talking about, Manoj, they are working on it. They are not formed up. So by March end, the result when they declare, they will declare the leadership change.
Well, it is interesting. You are giving the timeline at least March, and we don't know when it will come because it's a young gen. handing over is very, very difficult. It is easy to talk about it.
I know. So that is what they're working out the intricacies.
Right.
And when to announce.
We wish them all the best.
Yeah.
Next, red flag or deep dive insight.
Yeah.
The good, bad, and ugly.
Okay, so that was about Reliance. Anything else?
HDFC Bank, we can go up to next.
Or should we?
I think we can go on to HDFC Bank.
HDFC, I couldn't download that, Manojji. Can we go to Unilever?
Yeah, certainly. Unilever is a fantastic company, MNC, and a large company, and the best in the space in terms of valuation and market cap.
We'll look at the consolidated financials rather than. Yeah. So here again, significant growth as compared to December 20 as well as compared to September quarter. So the media article, etc., what I stumbled into, the management, of course, I mean there was a impact of the rebase, the last quarter, the December 2020 quarter was, kind of the impact of COVID was still there. But as compared to that, there is a rebase effect, which is evident in the results. It also mentioned about increase in rural consumption of, consumer goods. In terms of, and also so if you look at the line item, advertising and promotion, I mean, Unilever is one of the largest advertisers amongst the FMCGs in India. So as compared to that, there is a decline in what I found, interesting about this is as compared to December 2020 quarter, December 2021 quarter, there is a decline in the ad spend, advertisement and promotion. So the second last, line item. And also there is a decline as compared to September, September quarter. So that is slightly, interesting. Profitability as compared to, last December, it was 2,300 crores. So very stable and very steady profitability. Segment results. Big growth in home care, in beauty and personal care. That is, largest segments are home care and beauty and personal care. So again, good growth. I mean, many believe that, Unilever's results is basically, it's a signal for, whether the economy, the rural economy especially is doing fine. Unilever. So I think. Any specific input on this, Manojji or anyone else?
Two important points which come out.
Dinesh.
Two important points which are coming out is one is Hindustan Lever. For certain reasons, there has been no increase in market cap over the last year. Maybe last year it was considered a very defensive bet, and in the last 12 months, many of the large caps have gone up by 20 to 50-60%, and mid caps and small caps have gone even 200 to 500%. But Hindustan Lever has not performed on that. Second point is there has been significant increase in oil prices in the last year, and usually whenever the oil prices go up significantly, there is increase in cost.
That's right.
Procurement and raw material cost, what is called inflation, which is inching up, and ultimately the company increases prices and passes it on. So this has an impact on margins usually, and this quarter has been good. But what will be the impact? Of course, it always passes on successfully. So that is the area to also watch out in the forthcoming quarters.
That's right.
But a wonderful performance and clean report as usual. Debt-free company.
Yeah.
And a very good working capital management also. And done well in the pandemic in spite of challenging times.
Right.
And Unilever India is HindUnilever is contributing much more to the global business than the international company. It is a prize in the crown of the UK company.
In fact, many of the Indian CEOs, Unilever Indian CEOs have also, if I recollect, have made it to the global leadership. Right? So I think even from talent perspective, it has been a very significant contributor.
Certainly, they are always on hunting ground for talent, particularly the ICAWs. There are many ICAWs in the platform as contributors and core team members.
The global CEO, Nitin Paranjpe, is also, I think, at some point in time, he was at leadership level in India. So
yes, Mr. Manwani, Mr. Banga, many more. Even at the ground level, at the general manager level, they get international postings.
That's right.
So hone their experience as a part of the HR culture.
Today, India has got a pool of strength, talents. They have got very good talents. And especially the IT sector, we are the number one.
No, in fact, absolutely. So the other day, I was reading an article, a statistic that amongst all the unicorns in the world, Manojji, in the all unicorns in the world across, the US, the large unicorns, of course, is more than $1 billion valuation. So they did a study of, the founders, who are the founders and of which origin. So the maximum, if I recollect, around the highest ranking was that of Indians. That was 60 out of 100 or 150 or 200. The second was Israeli. Okay, of course, this is the non-US, non-American origins. And then there were others, the Germans, etc. But it's a very, apart from all these Fortune 500 companies, even in the startup world, in the unicorn world, I think it's Indian entrepreneurs who are actually, they're changing the world.
They're creating value. They are the leaders.
Yeah.
And suppose all the technical people, IT people, they come back to India and they work and they contribute, we will be number one.
That's
but because of that tapeism, ease of doing business, they're afraid.
Another point which has come in the chat room is important part. One should look at the DMart margins. DMart market cap is going up significantly from tens of thousands of crores to lakhs of crores. So one should watch out for the margins and when we compare with other retail players. Important point. So now we have.
But then that is I'm not sure who raised this question, but Manojji, that is what Mr. Robin Banerjee in his last week's very insightful discussion mentioned, right? Because they have ownership model. They own most of these stores, and therefore the rental cost is it's hardly any rental cost as compared to somebody like Future or Big Bazaar or something. So perhaps that's one of the factors, right? Unilever's is decreasing perhaps because I think again in the analyst meet they were talking about the input cost rising. So again, perhaps that's one of the reasons. Okay, with that, maybe if I can switch to Bajaj Auto.
Yeah, please.
Bajaj Auto, again, auto sales generally, again, a lot of people, a lot of analysts, economists are very interested in auto sales figures because again, that's something which, it's a kind of a signal for where the economy is heading, where the recovery is, whether there is recovery in the economy or not. So for the current quarter, they had sales in numbers. They also give sales in numbers so this quarter it was 11,81,000 as compared to 11,44,000 last quarter. And as compared to last December, this was there's a decline. Last December, we know that because that was a festive quarter after the COVID, the second wave of COVID, which was quite bad. So there was sudden spike in the demand for two-wheelers, and because of the public transportation, the restrictions on that, a lot of people were actually buying two-wheelers for the first time. So there was a significant growth in December 2020 quarter. This quarter has been stable. Revenue has been, so this quarter's revenue is 9,294 crores as compared to last quarter, previous quarter, 9,080 crores. In terms of profit, this is the PAT is 1,214 crores and almost similar to September quarter, and there's a slight decline as compared to December 2020. Let's see if they have given any notes here. Yeah, they have given this note number 2 with regards to road tape. Basically, this there has been the government grants and the export benefits. There is this new remissions of duties and taxes on export products. That is, the acronym for that is road tape. Basically, that has replaced many export benefits and incentives that were earlier prevalent. So many companies have been struggling to actually get the money refunded. So I've given a note towards that. And again, in accounting terms, whether it's it's reasonably certain to realize or not to realize, because there's a lot of documentation, etc. So they have given this note. And Percy, they have also mentioned this regrouping wala small note. So again, looking at the segment results, automotive as compared to investments, I mean, it's largely automotive. Investments is there, but it's largely automotive.
One important point, an observation from the futuristic angle, the way stakeholders look at the segments, particularly in the auto field globally and in India, and particularly with the government incentives by the union government, is everybody is looking at EV. Is the company EV ready, or they are getting EV ready? It is very important whether they will survive and revive and thrive. There have been some few innovative companies which have been from the non-traditional companies, innovators, entrepreneurs who have started EV testing, whether in two-wheelers or four-wheelers, and also other commercial vehicle, three-wheelers, etc. Now, to what extent companies should start sharing and disclosing the EV and non-EV is very, very important, because those are the questions. Your valuation depends on that. And if one sees Bajaj Auto valuation over the last year, it has underperformed the market. It is now considered a very value stock. And although the growth is there, it is a significant exporter. You can see from the company's tagline, right? World's favorite Indian. large part of the turnover, significant turnover is exported. But how much is EV? Of course, recently only Rajiv Bajaj has announced they are going to go into EV significantly, and next 5 years EV will form a significant part of turnover. But the numbers matter. There is another company in EV space with just a few thousands sales of their scooters in Gujarat. And today they have a market cap of around 2,000 crores, coming with a 500 crore rights issue. They would never been able to generate such money in rights issue a few years back. But as EV, that tag word and a buzzword has become very important. Their market cap to book value ratio is over now 7 to 8 times. So the EV readiness part is very, very important. Hopefully there are more disclosure on that.
No, absolutely. I mean, Manojji, this Ola Electric, that is the, Ola's electric bikes. It's already a unicorn without having a single sale, right? Again, it's, a pre-sale stage. It's still not launched its bike. It's still, everything is under construction. Still, uska valuation is, in excess of $1 billion. So absolutely, I mean, EV is something which.
Some company called Ratan India Enterprises, the share price used to be 3 rupees and 4 rupees. Today it has gone to over 500 rupees, over 10 times, right. Around 50 rupees, ranging 45 to 55, just because they launched EV scooter and less than 500 quantity sales. But known for watching market more of stock prices. Right. And of course, hopefully they develop a distribution model. But Rajiv Bajaj is one of the smartest persons in the auto space. And certainly he has something up his sleeve. Let the other ones come, and he will actually scale up and not only produce and satisfy the Indian customer, but satisfy the global customer. Hopefully they'll be the largest exporters of EVs in the future. We wish Rajiv all the best.
No, and we have seen that in this kind of technology, technology heavy sectors. You often don't have first mover advantage. Okay, at times it's the last mover advantage, right? So you can learn from the others' mistakes. So probably it's also at times wise to keep it, keep your cards closed and, later on looking at the market, see, because actually even, till recently, the government's policies was not very clear, right, with regards to EV. So I think we'll have to wait and watch.
You mentioned about last mover. Reliance Industries was the last mover in the telecom space. Absolutely. With the help of the union government. And here also the union government roles is very, very important. But ultimately in scale, one has to be among the first few fast movers. And incidentally, last week only, Mahindra Group announced their tie-up in the EV space with Hero Motors. Right. Hero Motors has been doing a lot of good work, pioneering work in the two-wheeler, and Mahindra being among the sharpest innovators and high quality corporate governance. They announced, why not use the technology? They announced a tie-up. So ultimately it will be a win-win situation between the large scale player, M&M. It is a conglomerate in now getting into all platforms of four-wheeler, or earlier it was.
Absolutely. And another thing, in this automotive space, both in two-wheelers as well as four-wheelers, Manoj, is this direct-to-customer strategy. If you look at Mercedes, they announced that they will not have dealers anymore. Okay, it will be directly booking through Mercedes. And I think that's that's a trend that will catch up with many of the other automotive companies also. And I think some of these new world, Ola, etc., will probably, they have also announced likewise. So Bajaj and all these old automotive companies, one of their strengths was the dealership. Right, in India, you cannot beat them for dealership. So we'll have to see how that progresses also.
And the brand, the Chetak, it used to have booking for a ticket. So quite interesting. Lots of developments in the space. the whole ecosystem for batteries and lowering the cost of batteries.
Right.
And the charging ecosystem also hopefully taking off very, very fast. And much more announcements may also come in the budget, particularly on EV, and also a provisioning for incentives for the additionally for the PLI that will certainly come for the next year. So many companies scaling off. So what next, Sandeep, Baldava?
Yeah.
Yeah, you are here with us. Would like you to take up any issues you want. There are lots of interaction. And Santosh, anything else on the companies? Some observations? I would just like to mention, Santosh, we talked about HDFC Bank. It is a leading player. We'll do a deep dive further. But what is coming out, the results have been wonderful. The performance of the bank among the best in class. That what we have been looking forward to everybody, the growth in NII is still below what would come from such a company. Of course, that may be deliberate because of cautious lending. But the people have been watching the banking system. Even RBI has been sending off in their monetary policy liquidity measures. Everybody is looking for good credit growth. Now, credit growth has to come if the economy really has to thrive. So credit growth can be much faster, but HDFC Bank is known for 20% growth. Now, if it falls to 15%, also people feel concerned. Although it is excellent and total credit growth may be in the range of maybe 12%, hopefully 23. So it may be gearing up, but NII growth is everybody looking forward to because lending cost has come down. Home loans are going off at, we saw holding at SV Road 6.4% Bandhan Bank. When the money market rates are going up, even the Maharashtra government raised funds at what, 7.2% last week. So government is borrowing at 7.2 and lending rates are low. And ultimately, so the NIMs come down.
Yeah.
And then ultimately expectations of 20% growth is there. Ultimately, India becoming the fastest growing economy in the world, beating China and more business coming to India. It may happen. So that's
what
to
we
watch
will
out
do,
for.
Manoj ji, is that maybe one of the other Saturdays, unfortunately I have to, log out now. But one of the other Saturdays, what we can do is analyze the results of all the, leading banks like, HDFC and ICICI Bank, and also the leading NBFCs like Bajaj and L&T Finance and all that. And we can keep a NBFC specific, result watch, something like that.
ICICI Bank is coming with results today. Everybody is looking forward to that.
Yeah.
And many more will come.
I think
so,
Kotak is something also which a lot of people are,
we will continue doing deep dives. Every aspect is important. Every red flag is important. The good, bad, and ugly. Yeah. So great work.
Thank you, everyone.
So wonderful. Yeah, Sandeep.
So any specific questions that anyone has for me?
Yeah, many specific questions. Many have said raise on chat also. Many would like to speak. Rakesh, you are here with us? Yeah, Dr. Ganatra. Everybody is waiting for you.
Yeah, I had raised those points.
Yeah, we can have your thoughts also now.
First of all, of course, I must
put on a video, no? Is your video on?
Oh yeah. First of all, of course, big compliments to Sandeep ji for a brilliant presentation. I'm going to buy this book and read it. He showed, how in LC there are frauds. I had come across in my first resolution. When I went, when you are an insider, you know company better. So, if you're doing forensic audit, even if you're doing statutory audit, you have a chance to delve deep, of course, which you don't do because
so we can't hear you.
Job. What a paltry money they. Hello, can you hear me?
Can you repeat that you are off for some time? Just repeat.
Oh, it must have been internet. So when in Raj Oils, When I took over, the cash cycle was less than 20 days. Okay. Whereas over years, the receivables had piled up to 6 months of sales and all that. So what is the red flag that the bankers should have had? What happened was IFCA factors, SB, SIDB were all very happy giving unsecured bills discounting limits. And the company was very happy discounting those and taking all the money out. That was a fraud, absolute fraud. So what I did was there was no need for me to analyze, but I analyzed 10 years balance sheets. And I found I just wanted to figure out a company which was there for 50 years and it was always operating profitably. Why suddenly it became bad? So they had a plan to make a public issue. So they started ramping up. They made the figures good. They made a public issue of 125 crore. SEBI doesn't put any monitoring below 500 crore. As if 500 crore is a small amount. No monitoring, they blew it up. So when I found that, I said, look, banks are very happy building assets in their books, but what's there on the ground? That's another fraud which happens. When you go to the bank, you have a savings bank account for decades and yet they want more and more KYC, but no KYC when it comes to, discounting these kinds of bills. So I had put, those bar charts in my information memorandum. So I just wanted to highlight this point to you also. LC,
very important.
I will give contract to my, See, you want to say something?
Yeah, so I think I'm saying that that's again a very important point. The KYC today has become a document. Earlier, if you remember, know your customer means you actually knew your customer. The bank manager not just knew the customer, but also the family, the children, everybody, sort of was, known. But in this world, there are several cases where I have done, forensic audit on behalf of, banks. The bankers have actually first time visited that, entity, along with the team. Okay. And I'm not talking about small amounts. So the concept was that anybody who wants money, they should come to, us. They would come with all the flashy presentations, Excel files, etc. And, sort of convince the banker and then start off the process. While the bankers are generally diligent in the stage one, but over a period of time, as the comfort gets developed, and as I think, they start getting their installments and money back, over a period of time, the over comfort gets developed, and slowly, I think things start, and before they realize it becomes so big that they can't handle.
Yes, and in fact, they get into they relegate due diligence, and deal making takes the front stage. So the moment you get into deal making stage, you are going to falter, and that's what happens. And especially if the bank doesn't belong to anybody, public sector, this is what happens. So that was a fabulous thing. I really enjoyed. Looking forward to reading your note. Another interesting thing I'll tell you, after having spent 20 and a half years in lending side, when I went to corporate sector, the top management, I'll not name the company. I'll not hint it even because that will not be fair. What the company was doing was that it was selling its output through a British trading company, paying 5% commission to it. But actual commission was around 1%. It was collecting the remaining in Cayman Island.
Correct.
Okay. Now this company, this group came into CDR in early 2000s. So it transferred 100% equity in one of the companies and 51% in another company to this British company. The British company was an honest chore, in the word I'll use. So they were passing on that money there. That money was used to acquire this, but somewhere in the hierarchy, the company actually belonged to the Indian company. For the bankers, it was an outsider. Fast forward 2004 onward, the steel market started booming. So they bought back both the companies. Okay, they bought, their investment was sitting in the balance sheet. Now they bought back at a much higher price, but by valuing those things at a higher, they did not have to create goodwill. They created revaluation reserve. With that, the debt equity became very beautiful. Yeah. Now the banks don't look at debt to EBITDA ratio, which tells you all, right? And then when they bought that, now comes the crux of the matter. $150 million was the capital gains for that company, the British company. But do you know that in their consolidated balance sheets, they did not recognize this profit? What does it mean? It means that for the press here, for the banks here, that was the British company's ownership, 100% and 51%. Actually, it was theirs. So I think these are the frauds which are impossible to find out, because what they do is they pick up, you can go to the website, it's Shanahan Engineering. It takes up the EPC. It takes up the EPC and passes on elsewhere in the world.
Correct.
I'm going to have on the paper competitive bidding and all that nonsense. I will doctor my bidding, but I'll go for the cost that I want and I'll recover elsewhere. And Chinese are very good chores in that, you know, the SEPCO and all that. And therefore, the BHEL cannot compete with them. And BHEL being public sector doesn't have the efficiency. It continues to incur losses. So these are some of the frauds. Maybe in your second edition, you could add.
Absolutely. So it will be good, I think, to have a interaction. So once you've gone through the book, so we'll meet and then see, because I think creating this awareness through different case studies is critical. So I had done 1,000 odd cases. I have covered about 100 in this book. So hopefully in the next version we'll cover more. But it's good to again understand different facets of this.
I would like to mention Dr. Ganatra is a CFA and a PhD. And if he takes out time, he can write 5 books, which is experience, and has been a CEO, worked with SIDBI and also ITBI when it was a pioneer in the development space. Largest lending was done by ITBI, then other institutions came. And some of the finest finance men really give hats off to him. They often they tell me they worked with him and learned a lot from him. And does deep dive now. Right now, he can do with the Excel sheet on some of the companies. We can tell him now, including Reliance, right? So this is
actually one of the students sent me the Reliance ratios today, this morning. So I wrote to him. He said that now with this amendment in Schedule 3, ratios have to be given. And funnily, in Reliance, the debt service coverage ratio for FY 2021 and 9 months is less than 1. Now, is that possible? If the debt service coverage ratio is less than 1, you are certainly defaulting. But the fact is that in the numerator, they have not added back the depreciation and amortization. So I'm going to check the definition because it has got to be EBITDA minus tax in the numerator. It can't be EBIT. So that's the reason that was the only thing. Another thing which I've seen is, often some of these portals of even, the equity broking houses, once they were showing that the RIL's return on capital employed was 8%. If it was 8% and with a debt to EBITDA of over 3.5, it should have been certainly defaulting. The fact is that when you are taking the return on capital employed, you are doing EBIT divided by total capital employed, which is net fixed assets plus net current assets. The moment you allow, all those long-term investments and capital work in progress in the denominator, you are depressing the ROCE. If you remove that, the ROCE would zoom up to 25%. So that's what it was doing. It was taking a huge risk by leveraging its balance sheet backed by its earning. And it was investing to create some extremely valuable asset, which it proved during the COVID time by selling 25% of Geo platform for 1.5 crore. And contrast it with Alok Industries, which also kept on, or Videocon Industries. It created investments which have proved to be dud. So that's where the organization matters. And Reliance has, how many of you, most of you might be knowing, but some of you might not be knowing, who is the CFO of Reliance Industries? Alok Agarwal.
There are 2 CFOs, joint CFOs.
Yeah. Alok Agarwal is 1978, I think, IIT Delhi and 1980 IIM Ahmedabad. Low profile, brilliant fellows. It's an organization which makes, and that's what they have done.
Mr. Srikanth is also there. Give credit to him. Join CFO.
यार वो बच्चा है यार, वो क्या करेगा? It's not a joke.
No, they are smart people.
Actually, Reliance had offered to my Sadhu Bhai co-brother over about 10 years back, an offer job 2.5 crore to build up the organization. He was the deputy chief secretary at that time. So Modi ji didn't release him, so he didn't join. So even at that time, they have been, since for the last 10 years, they've been working on the next level. So hopefully they come up with something now.
Interesting thing is the Reliance is always looking at, you mentioned about default. They are looking at the companies with default and they get squeezed in and acquire assets at distressed values. We talked about Alok. What happened? Alok has some of the finest infrastructure in textiles. Also raised huge borrowings and diverted money into real estate much early in the game, and they defaulted. And what price Reliance took over? At a throwaway price.
Was it Jain? What's his name? It was Jain, not Alok Agarwal.
No, Alok Agarwal is a joint CFO. We are talking about Alok Industries also. Now,
Alok
Industries, textile space. Now that Alok Industries came in with results now, and it has turned around. And 1 rupee share is now over 30 with Reliance now management. And ultimately, they acquired this company at a throwaway price with the help of JM Investment Bankers. JM Financial was an investment banker, and it was a very cleverly structured deal. How a company defaults, and this was a company which was not delisted in IBC. So it was restructured, and ultimately the shareholders have got their the original face value at least. The now restructured face value is 1. It is in 30. It is going up, but the company has shown turnaround and very large textile infrastructure. Mr. S.K. Agarwal, you have deep insights on this financial analysis and issues.
Yes.
And also insolvency cases, IBCs like Alok. Your thoughts? And Sandeep.
So just sorry, I have to jump on to another call at 1, which I can't avoid.
Okay.
So pleasure meeting all of you, and it was good, I think, interaction. Plus, feel free to reach out to me. My details are with Manoj, so I am sure he can pass on. But look forward to your feedback and also more interactions. Thanks, everyone.
And Sandeep, keep on coming. We look forward to have you next month and with more red flags.
Thank you. Bye-bye.
Manoj?
Yeah, Mr. S.K. Agarwal. Thoughts.
Manoj, you were talking about Alok Agarwal.
Alok Agarwal, Mr. Dr. Ganatra mentioned, and we are talking about Alok Industries also.
I know, sir. The Alok Agarwal is a simple, low profile behind the scene, and he is the master. He's the master in numbers. Nobody can compare him. I know him personally because I look after his affairs in income tax, wealth tax, and everything.
Wonderful.
Nobody can beat him. What an IQ. You present him and he'll say, no, yes. So no comparison about him. No comparison. And
that's a good insight. Maybe he can look at lots of corporate governance issues being raised on the company, and also on talent management, where they have huge weaknesses over the last decade, and maybe make further improvements, because he is always known to say he likes to do regular improvements.
Yes. And
so some red flag areas many people have raised about talent, handling talent, particularly top level professionals, and also on governance, because he is quite senior now. This is a legacy he can improve before he hands over to the new young leadership transformation team. They have their own way of working. So hope they listen to him. In fact, some people say in many verticals, they want to ignore Alok Agarwal because he is busy with many larger things. So they don't listen to him. And some of the names have also being shared openly. This is very, very important. So he has made huge money through ESOPs, over 50 crores, huh? And also salary over 16 crores, as much as the promoter. But improvements are done. So they set benchmarks for handling talent,
You see,
particularly senior professionals, and also financial reporting.
Manoj,
Yeah.
big boss, Mr. Mukesh, he
Yeah.
will not do anything or take over any company without the consultation of Alok. Can you imagine?
That's interesting. He listens to professionals.
Yes, he listens to it.
Yes.
Everything, anything deal, he is there. Now they're trying to buy out Syntex, textiles. So now their due diligence has been done and they're just awaiting. And they will buy out. Welspun will nowhere comparison.
Listening is very important. That's important.
Yes.
So
here's a plan.
You mentioned about big boss listening. So Alok also needs to listen and also implement his instructions are followed across. And it's a large group. Ultimately, it's an image of Reliance.
Yes.
The brand Reliance. Your thoughts on Alok Industries and IBC and quite a few other IBC cases which are happening.
Yes, yes.
Latest, including the latest ones, would like to know your thoughts.
Sorry?
Latest IBC cases also. Alok Industries was an IBC case.
Yes.
It survived, revived, and now thriving again.
Yes, yes.
And there are many other cases in NCLTs and IBC. They also have got a huge assets and potential, how they can also revive, survive, and also then revive and also thrive.
Challenge. That's a challenge. You need a complete infrastructure, you need the money, power, everything is required there.
What are your thoughts on Reliance? Reliance Home and their subsidiaries which have gone into NCLT case, and there are huge assets, insurance companies, wonderful results being coming out, very good JVs, insurance, life insurance space doing well, companies also doing well, general insurance company doing well, sector doing well, companies also doing very well. But the challenges we have of NCLT, COC meetings as a professional, how do you look at such issues?
So, being a director, I will reserve my comments on this. I will not comment anything on Reliance Capital or other group companies.
Okay.
Because I'm associated with them, in many aspects. So I will not comment anything on this.
Okay. Yeah, Dr. Ganatra, you have looked at Reliance Capital deeply, and there are latest developments.
I haven't really. I haven't studied this.
Okay. Last week, there has been a very wide coverage about Reliance Capital and the insurance company. And BDO is looking at it again. Earlier, Grant Thornton looked at the group companies in terms of forensic audit. That's a very vital issue. They looked at forensic audit. Grant Thornton brought out over 250 pages report with annexures. Now BDO is looking at it, and so board has been superseded in Reliance Capital with a board of advisors, including Praveen Kadle, also into it, and how they will recover the assets for the NCD holders, secured NCD holders. Many of them are institutions, but the assets intrinsic value is much higher. Nippon, Life, and Reliance General. But as we know, some thoughts about what happens the distress value. There will be a transaction audit, and there will be a liquidation value and a distress value. While looking at insurance companies, embedded value is much higher compared to the book value, embedded value, and market valuations are now over 3 times embedded value. We all know now insurance sector is booming. LIC is also getting listed. Whole market is booming. But what happens in such issues? If you can share your perspective on Dr. Ganatra, on this liquidation values and distress values and actual intrinsic and potential value.
Now, the thing is, when you're talking of fair value, let's say, or fair market value, if it's manufacturing company, it's obviously going to be the DCF, right? Even if it's a finance company, it's going to be DCF criterion, right? Now, what the crux of this matter is that if I'm valuing a company, I should really be able to estimate the cash flow. I have to estimate the cash flow over its economic life and then discount at an appropriate rate. So these are the challenges, very simply stated, but very difficult to implement. Unless I understand the business very well, I can't do justice to this. Yes, we have a problem about discount rate, how we'll determine, but still that can be understood. We have at least some proxies we can approximate, we can do. But how to come to a cash flow estimation, that's one problem you face. Second, whenever valuers do the valuation, they simply come up with fair market value and then they discount it. They say 80% of it will be the liquidation value, which doesn't make sense. Liquidation value is not distress value. Distress value might say that, okay, if you have to sell within a specific time, then you might not be able to optimize competition, so you will end up losing money. So you can adopt some discount. But that is not the liquidation value. Liquidation value will be the value of the assets, whether sold on piecemeal basis or lump sum basis. Now, again, that requires technical expertise. So even when somebody is doing securities valuation in, registered by SEBI, IBBI and empaneled by the RVOs, he cannot really do the liquidation value. Liquidation value is a technical job and not by any technical fellow, somebody who understands that these are the challenges we're facing. That's why once somebody had made a mention, in the fraud in the chat, one person made a mention about another fraud called valuation in connivance. Now that's a fact which cannot be denied today, though one can't prove it, and this is a genuine problem as well. Now we do not know how this IBBA is going to address that. They have to probably approve the firms for specific industries. I hope it evolves over a period of time.
Very important thing on valuation and connivance, because people say valuation is an art and a science. So the values can be manipulated away. The valuer wants. And there are many registered valuers here. Yeah, there's Rakesh Nathwani here. Rakesh, would you like to speak? Just mention your qualification profile and share your thoughts.
Yeah, thanks, Manoj and everyone. I am CA Rakesh Nathwani. I am forensic auditor and insolvency professional, and also doing sustainability audit as a BRSR auditor. I just wanted to touch upon this IBC and what Dr. Ganatra also spoke about. And there is one real recent case, it is in public domain. A company in NCLT with 2,600 crore loans were bought over for 130 crore only, incidentally by the same promoters under MSME criteria. So they were not disqualified as a potential resolution applicant. So these are the kind of cases happening. These are the kind of actual real life cases in front of us, which clearly, first of all, how an MSME company can have a debt of 2,600 crores at first place, right? So there are a lot of related issues on this kind of a cases with forensic and IBC together. I just wanted to share that what I recently
possible to share the name, Rakesh ji? I would like to download that.
I don't have it in front of me, but I will send you that in that name later in the group.
Yeah,
it's a recent case of
Yeah. The related point is section 240A. Section 29A, debars the defaulters unless they fix the map problem.
Right.
But section 240A allows MSME people to participate if only they have two defaults, section 29AC where they have failed in servicing their debt, and 29A clause H where they have failed in honoring the guarantee. If there are other debilities, they are also out. But tell me, where in the world, okay, they are allowed to bid. Now, I can understand if such fellow is allowed to bid for his own company, but they are allowed to bid anywhere. Now, that is crazy. Where in the world will you find a distressed company bidding for another? In fact, I wrote to IBBI my views. I said this has to be amended to make it specifically for his own company. Now, I have seen such fellows who go out and bid for others. They will impair their assets, bring down the value to less than, let's say, 50 crore, and then they say that I am MSME, and they will claim their own company. They will claim other companies as well. This is the drama.
A lot of things are happening. True.
Yeah.
Dr. Kanoria has raised his hand. Dr. Kanoria, just speak about yourself and your profile.
Yes, I'm a businessman. I'm running a small NBFC, which is a non-deposit taking NBFC.
What is the name of the NBFC?
It's called On-Track Suppliers Private Limited.
Okay.
And because we were talking about Alok Textiles and how the shareholders have benefited, the share price has risen probably 15 times from its lows. Now, this has happened because there has been a write-off of debt from, I think, 24,000 crores down to 5,000 crores. Now, in other cases like DHFL, the shareholders were written down to zero. Now, I think this is a little unfair when the company has not gone into liquidation, but there is a takeover. There are certain safeguards that the shareholder has in terms of SEBI regulations and minority rights. Even when a shareholder, a company delists from a stock exchange, they have to follow certain procedures and give the shareholders an exit route. So I think that in certain companies where the write-off is much lesser than in Alok Textiles, but Alok Textile shareholder has the opportunity to recover his money if the company grows. But in other companies, the shares are written down to zero. I think this is a matter that needs to be looked into in order to give a little more protection to shareholders.
Speak. Hello? Yeah, speak. Just speak. Aryan, join and speak. Yeah. No, you speak. They all are waiting for you. You're called. Important point raised is here. DHFL was written off. There is no clarity on the companies which will be written off or they will get value. There are lots of controversies, like JP Infra, Reliance Naval. So what is the resolution plan? Some people are privy to it and some are not privy to it. So if as many people in IBBI have shared, resolution plan should be shared and there should be sufficient information available to all the stakeholders, including the bidders, and what type of portion is left for equity. Right? Would anybody else like to mention thoughts on this? Aryan?
Yes, sir.
Yeah, are you on? Put your video on.
Yeah.
Would like you to share your thoughts from IR perspective on how IR looks at companies and also perception studies, which are very, very important for all companies, whether the good, the bad, or the ugly.
Yes, sir. So
perception is more important in all such cases. Practical issues we have been discussing, whether Reliance Industries or HindUnilever or Alok Industries or Reliance Capital or Reliance Nippon Life or Reliance General Insurance, Bajaj Group, EV companies, PTC Financial, board issues, reporting issues, segment issues. Just ensure a video is on. Aryan?
Hello.
Yeah.
So there seems to be some issue with the internet right now. So
would anybody like to share something before Aryan reconnects again? Well,
I just wanted to, Dr. Ganatra had asked the name of that case. Dr. Ganatra, it's a company called Pradeep Overseas, and order is from NCLT Ahmedabad in October 21.
Good.
I have put the details on the chat.
Yeah.
Thank you.
Mr. Dushyant Shah, you are in with us?
Yeah, I've been listening.
Yeah. Your thoughts. Put your video on and share your thoughts on this vital issues you track very, very closely.
No, the thing is, because the way the details have been shared, that much detail, I don't follow because it's not exactly the depth in which I go into it. But then I like to get here there are analysis and findings. But talking about these IBC and the way the Reliance goes into these the companies in distress is one of the very good business strategy to get assets at a very throwaway price. And talking about Alok Industries, that particular the company has been restructured, but the overall arrangement I really don't really understand that the loans have not been written off. The loans have been assigned to JM Finance, and the equity was earlier, equity was earlier abolished. The equity capital was earlier abolished, and then it was again reinstated. So maybe Dr. Ganatra or somebody who knows about the case can throw some light on that.
Which company is it?
Sorry?
Which company?
Alok Industries. Alok Industries, the way the arrangement has been done, unlike other companies which are taken over and merged with the parent company, this Alok company is not been taken over. It's an associate company of Reliance, and the loans are not written off. They have repaid the consideration to the banks, but the loans have been assigned to JM Finance. They have not been written off, and the equity was written off, but it was again reinstated.
Yeah. Put your video on and speak.
Yeah.
So that arrangement, if somebody is aware of or familiar with, I thought can share, what exactly that means.
In fact, I'll talk on this sometime later after getting exact information, but I'm generally aware of the involvement of ARCs. Now, what happens is that the ARCs buy out the loan, as we are all aware, at a price which is less than 100%. For the remaining price, they give the security receipts. Now, security receipts are written off over a period of time. But in any case, whether they buy it from, whether they acquire under IBC with ARC sitting in the lender's shoes, stepping in the lender's shoes or not, under IBC, it is very clear. There can be the deepest debt restructuring, liability restructuring. There can be the deepest equity restructuring and the deepest asset restructuring, both, all the three. Now here, you write off the equity and you bring fresh equity. So you have the ownership. The SEBI allows, if the equity holding goes beyond 75%, it allows 2 years time to fix that up, which is fair enough. That's done. The lenders, they get their part based on the, repayment schedule given in the resolution plan. That's what happens. So where, of course, the ARC comes in. Now, we do not know whether it was 1585. I'll find out and I'll get back to you. But overall, the equity is written off substantially. In case of, we are aware that Electrosteel, the write-off was 95%. It was also listed. In case of Raj Oil, it was 95% write-off. So that's how it was. So here, we do not know who were the competitors to Reliance. Eventually, it won that deal. How GM ARC got into it, as I mentioned, I'll come later. But if you look at it similarly, you have the Ruchi Soya, where the lenders sacrifice. They did not ask for a piece of debt to be converted into equity. They could have asked. It's not that the resolution plan is submitted and that's final. It's always subject to negotiation. But they did not know that the topless man would revive it so fast that the pricing will go up, the equity price. That's what happened.
No, Dr. Ganatra, yeah, I appreciate what you're saying. And definitely, once you get some more details, I will like to get hear from you. But I did some kind of fact finding myself, because I was interested in Alok share price movement, right? Because from 3 rupees, it went up to 57. There's so many upper circuits. Yeah, and again it came back to around 17, 18, and again now it is gone up to some 32, 33 or whatever. The thing is that since Reliance took over the company and the price was the erstwhile Alok was a very good company otherwise, and there are a lot of textile plants and a lot of business before they went bankrupt and all that. So the company was basically good, but the money was siphoned off, and somehow finally it came into IBC and Reliance got it. The thing is that the equity was earlier they took a SEBI permission to write it off, but later on they took SEBI permission not to write off, as far as my memory goes. And the loans were assigned. There was no adjustment whatsoever. Well, I think about 27 to 28,000 was due to the banks, and the deal was 5,000 crore. Earlier it was less than that. If they bid at a liquidation value, then the NCLT said that it's a too less a value. So they increased their offer to something like 5,000 crore. And 5,000 crore was also taken on loan by guarantee from the Reliance, and the same 5,000 crores was given to the bank. So Reliance has not a single paisa he has given to these banks. They have added some equity. They have brought in some equity, something like 500 crore equity they have brought in the company. And whatever loans were there, some loans they have written off, and some loans have been assigned to GM Finance. Now, because ultimately Alok Industry has to pay to GM Finance after maybe 8 years, I think, as per the deal. So why Alok has to pay to GM Finance when the banks are out, the real creditors, the real lenders are out?
No. What happens? I have just downloaded. So sorry to interject, Dushan bhai.
No problem.
Shall I respond?
Yeah, please.
See, basically, when ARC is buying the debt, ARC is stepping in the shoes of the lender. Now, it may buy 100 crore debt for 10 crore. That's a different thing. In the company's book, it doesn't change, but the debt is sold off as a distress value to the ARC. ARCs have a good regulatory arbitrage. What can you do about it? Recently, RBI's expert committee came up with a report which is, not up to the mark, of course, to do whatever they want to. But in any case, I just, as we were talking, I just downloaded that 58-page report. I'll be going through it, and maybe next time we'll talk about it. But sure. If it's an 8-year repayment to ARC, the beauty to ARC is that it's going to enjoy the management fee. Now, I'll just explain this in half a minute. What happens? Suppose if I bought a loan for 100 crore with 15% I have brought, like 1585 structure. Now, I'll get 1.5% management fee on this for managing this asset. So this 1.5% will be on the outstanding total SR value, that is 100 crore. So my management fee becomes 10% because I'll get 1.5%, let's say, on 100 crore the assets acquired with 15 crore given, I'll get 1.5 crore. That's 10% I'm getting. Now, if I'm going to earn less, I'll spread it over a long time and get more. For example, let's say I get money 10 crore in 1 year. Suppose my expenses were 1 crore, so I'll recover those expenses, remaining is 9 crore, right? From 9 crore, I'll get my 1.5 crore management fee, assuming that the total was 100 crore.
Dr.
Right? So what
remains?
7.5 crore. Now 7.5 crore will be split between 15 and 85. So 85 will go away to the bank. Now, next year, I don't know how much will I get, how much I'll get. So I'll tell the fellow, don't give me 100 crore now. You better give me in installment so that, you know, I can keep on appropriating towards my management fee. That's how it happens. So that's why it has been spread over a long period of time. But okay, that's the advantage of regulatory arbitrage. But anyway, I'll come back on this next time when we meet.
Yeah, because you know, one point which came to my mind when I was also going through this.
Just request everybody put your video on, please.
Yeah, so you know, the point came to my mind was that when Reliance, such a big company, and the consideration was agreed at 5,000 crores by NCLT, I mean by the creditors, and the creditors were happy about it 5,000. What was the need for ARC to come in? So that part also possibly you can, you know, maybe look at, maybe share next time. Yeah.
ARC has been in a business. Of course, recent articles talks about ARC is involved in underhand deal, but ARC purchases assets at, they are specialized people in recovery. So they often purchase assets usually below 20% of their value. And they help the banks get rid of on record NPAs in their books.
Yeah, Manoj. Yeah,
but interestingly, one needs to see what has come in under and recent investigation. Many of the ARCs are associated with bureaucrats and retired bankers, and who work in collusion with some of the banks to get rid of very huge NPAs, which are in lakhs of crores. And recently in a raid, hundreds of crores of number two money was recovered. So, but in this case, GM Financial was a ARC. They acquired the assets of the company from bankers, and the company had borrowed over 10,000 crores. And many of the premier textile companies also never even borrowed 500 crores or 1,000 crores for textile business. It was ambitious, but who lost the maximum? The bankers. Who benefit the maximum? It is a partnership between Reliance Industries and GM. It was a cleverly structured planning, executed very, very well. Of course, the retail shareholder did not lose because it was not valued at zero. Equity value, ultimately it will grow, but the assets are in the company. But the net written down value of the asset is very, very low. So if you see the financial analysis or price to book calculation, it will be on written down values. But actual value of fixed assets which are acquired and bank loans taken is quite significantly high. But the key learning is these things happen, and if you have a big ticket industrialist or significant money in the bank or ability to borrow, you can take over distressed companies at throwaway value and ride the wave. But only good point is, as we have seen, the company is still listed. We'll have, Aryan Prem, would you like to share something on the image of companies and IR?
Yeah, hello everyone. Nice discussion. Thank you so much for this discussion, and I've been hearing since the beginning, and I really enjoyed the session. So, see, the corporate governance issue keeps cropping again and again before us, because a lot of companies do not adhere to the corporate governance issues. So, in this in this whole this thing. IR is very important. I've been the advisor for various companies, advising their investor relations and also in engaging the investor community. So IR is an activity that promotes, corporate growth and improves the conduct of the corporate management through the reporting of a company's business activities to shareholders and other stakeholders, thereby providing the discipline of exposure to the shareholders and evaluation. Further, the objective of corporate governance is very important because it is to making sure the company is well managed and is a good enterprise. Corporate governance also, at the same time, is the fundamental aim as IR is promoting growth and improving the management. This is what is important. That there is a growth and as well as there is improvement in management where they need to share the information as to what is happening, how they're running the company, what are the issues and all that. So I have been conducting last week also, last month also, I conducted a perception study for ITC and a lot of
which company you mentioned?
Sorry,
which company? PTC.
PTC India. Yeah, PTC. I conducted the perception report in terms of investor, what they are thinking at the moment, and also Bank of India and other companies also. So the investor do red flag a lot of issues that are there because they come to know and they red flag it. But the problem is that the management, the question is whether the management really listens to the feedback that comes from the stakeholders like investors and analyst community. So that we keep suggesting them that these are the inputs that have come, this the feedbacks. You need to take this seriously, and accordingly, your organization should respond to these things. But I would say that most of them do not really listen to the investors as to what is happening. So because perception management is also very important, is the crucial part of the public relation and perception in the market. Is perception is one's map of reality, as we say. So whatever is the perception, people think that is the truth. So in the investor relations, we have to, ensure that the proper flow of information is provided to the investors and to the stakeholders, whether it's through media reports or through investor conferences that happen, con calls that happen, and the company should not, hide information or manage, their investor relation properly. That is very important. And in case of PTC all messes out. They have put some 55 pages document on the stock exchange, whatever are the reasons of those board of directors who resigned, and they have created mess out of that. It seems like the company does not really care about investors or does not really care about how it functions and how it is perceived in the market, because if they would have thought that whatever out of the mess that is there, which they have thrown in the market, how the market will react to this, and how the company will be perceived, and how it will impact the corporate reputation also. They did not. It seems to many people that they didn't care about, which they should have handled it properly. Before putting it on the exchanges, they should have actually, done some kind of. Today you have media, they should have done maybe a press conference or something to handle it well, so that the investors should have taken into confidence that so which they had. I mean, they did not do later on. I think they did clarify, but then there was a mess, and the stock price has also tumbled, badly. So it's important that the company should manage their perception and their investor relations and their public relations well, and they should actually listen to the feedback that comes from their stakeholders. That is very important. So that's what I just wanted to mention at this point of time. I think we're running out of time. Yes, Manoj. Can you hear me, sir?
Yeah. Excellent. Very good insights, sir, on the IR issues and what companies need to do, engage with stakeholders, communicate appropriately rather than a sudden notification on the stock exchange.
Correct.
Dr. Ganatra? Dushyant?
Nothing more to add from me, Manojji.
Yeah, one point for you. Your views. This week, 3 independent directors resigned from NBFC collectively, and that notification was shared by the compliance officer to the stock exchange. Collectively, 3 independent directors resigned. They are appointed by the shareholders. So they don't engage with the shareholders rather than call a EGM or appropriate meeting and abdicate responsibility, apparently prima facie serious issues. Then who is accountable? If the CEO or operating management has issues, then some solution should be found, or the board is just left to the CFO, the CEO without a CFO. Apparently, the company had some CFO issues. So what is the role of independent directors is vital, whom they are accountable for. If all of them abdicate the ship before the ship reaches the shore, then what is the solution?
Right. You have raised a very important point. Independent director is an oxymoron. You don't have independent directors, really speaking. They are all picked up by the promoters and the whole process is done. That we know very well. Coming to the second point, anyway, they are still independent directors. They should have raised issues rather than running away. Now they are accountable. Now, if the details come out, then only they can be taken to task. That's all. We have to wait for the time.
Very important pointer. Oxymoron, and raise issues with whom? They are accountable to the stakeholders. This company is a government company. So President of India is definitely looking at independent directors to play the role. The company secretary is not a boss of independent director. The CEO is not a boss. If they say we raised the issue with the company secretary or the CEO or the chairman and he did not listen and they resign collectively, then what is the solution? Of course, this shows the problem may be serious, but then it's a government company. Government expects something from independent directors. They get their sitting fees. They get huge fees in the good times. And now a 55-page memo. One director sends a long letter. Another director supports independent, and third director supports. And the fourth director resigns from the parent company, saying this is a covering letter, 1 page, and this is an attachment by other 3 directors. I am also going off. Investigation gets ordered, and when investigation will be complete, and what happens to the stakeholder, what happens to the company? Who is the beneficiary? Is the beneficiary the remaining CEO, the remaining chairman, who can just issue a statement it is under investigation? All stakeholders are wondering, new things happening. It's interesting, and some of the independent directors are well known, very, very well known, professionally qualified, and one of them have huge experience in investments also. Would such directors be appointed again because they are known for resignation, or would they be invited by other companies who are A-class companies that we want such people from you? But what is the time of entry and what is the time of exit? It's very, very crucial. I think a new era has started for independent directors. Earlier, they were told to give an exam by IICA, Indian Institute of Corporate Affairs. Now, exam is not required for professionals, but benchmarks are required. Real life case examples are required, like PTC and PTC Financial. And people who have resigned are some of the known to be very highly reputed cases. Dushyant, your thoughts?
Yes, Manoj, I've been
Yeah, put
listening.
your video on. Yeah.
With a due respect to what you said and what the others have done, I think, to my mind, they had no other choice but to resign, because they have been taking up this matter for more than 6 months, and the CEO or the chairman was not heeding to the request at all. They have asked for information for so long by emails and by personal meetings and all. Nothing was forthcoming. So what additional purpose they have served if they have continued? At least because of the resignation, now that PTC board meeting is there after 2 days, and the PTC people have woken up, and they are also part of the whole thing. Why? Because their NR committee, that compensation committee or whatever committee was there, that director was assigned from PTC, and this independent directors wanted to have some details, and that director who was assigned from PTC was withdrawn just before the meeting date, and that meeting never took place. So people have been playing games, and these people, I think, were finding it so helpless. What additional purpose they have served by continuing? So they had no other choice, I would say. And so the whole limelight should go on to the what is the corporate governance issue, why this CFO was not allowed to join, why PTC kept quiet. There are nominated directors on the board, and these are the issues. The resignation is not issue. Resignation is what they have done out of frustration. They are very responsible people. They know their duty. So let us get some more detail out. Let the PTC board meet. Let them do the investigation. It's a very serious issues they have talked about. So it is not that because they have resigned, so they have been irresponsible. No, they have been fully responsible, I would say, because there was no other choice. Nothing more they could have done by continuing.
It's
they have tried for 6 months.
You mentioned about trying to raise the issue with one of the board members of the company, and second issue of frustration. But resign and accountability to whom? So the parent company, the representative of the government on the board, is very, very clear. Corporate governance is a process and not an event. And whom the resignation should ultimately be done, and engagement, it is a stakeholder. And as of now, nothing has been done. People will wait, but what happens to the ship? It has to reach the shore. And what happens to the valuation? What happens to the deal?
See, the ship
why not? Why not they engage a forensic auditor if there are any doubts regarding a loan? Let the forensic auditor look at it. Now, why they leave it to the remaining one board member to look at the issue? Forensic auditor may not be appointed also in the next board meeting, or if he's appointed, it may be a forensic auditor of choice. And can't these three professionals who have there are high expectations, they have fiduciary duties also, can't they have ensured a forensic auditor is appointed before they resign? And ultimately, really what happens? And they don't listen. Can't they replace the CEO? We have seen other companies where the CEO has been told to leave. It has happened in a bank with the intervention of the regulator. Can't they have engaged with the regulator to see the CFO goes on leave at least? Now, there are many issues being raised by many stakeholders. So new era has begun for IDs, and many people have lost confidence in professionals coming and in as IDs. Also, the way sudden hits are happening is a resignation to a company secretary and abdicating. Is it a new best practice being set? Is that going to be the new benchmark? So directors are appointed, they call themselves independent directors, they get a remuneration, and at a time, whatever convenient to them or to their colleagues, they just hand over a resignation. What about the fees? Many people are raised, they have got in the past. Would they surrender the fees? They return the fees? Obviously, they will not, because ID is now more of a form than of substance. It's a tick box. Many directors, so many positions out of so many have to be filled up. Resignation is a matter of choice.
I think our conclusion, I won't agree with your conclusion.
There will not be any conclusion here. Conclusion is decided by the stakeholders in the market. One second, a conclusion is decided by the stakeholders in the market, and ultimately when the new directors would happen. But history is being formed in corporate governance. New era is started, and it's going to be wonderful space. Please keep watching the space. Also, next week some developments will happen.
Have you seen, Manojji, one last thing? Have you seen
Yes.
any so-called independent director resigning from the bank's board when they were going totally bust? No.
Yeah, this is a very, very, again, important independent directors in all institutions, corporate, banks, they resign one by one. Here a new history has been made. All the independent directors collectively got together and sent a collective memo of 55 pages, which has come on the stock exchange site, which is very interesting how people come to know. This also one by one directors have been resigning, which often we come to know through the stock exchange sites and discuss one by one, and then they give the reason. SEBI came out with regulations. Earlier they were not supposed to disclose reasons. Then companies were told to disclose to stock exchanges the reasons for resignation. So they had to give a 2-line reason, or a 20-line reason, or a 55-page reason. But point is, you are coming to know about it, and you are getting 55 pages. You may read half a page or 1 page, or read 55 pages. It's a very, very interesting study in the evolution of the corporate sector. 55 pages came, and then after 2 days, the PTC director also resigned. And he gave, this is the reason, there's 55 pages note we have got. One director has given X number of pages, another has supplemented, another has written a 1-page covering letter. Now the parent company also, point is when they resign, we come to know the reason. Red flags are coming out in the open. It's quite very important. Every resignation is important, disclosure, and point is what next? Who comes in a place and what happens to the organization? If there are forensic issue, it is not only about forensic investigation. The matter can go to serious fraud office or the government also. Right? There are institutions and establishments. So many issues are being raised. Many information flows are happening. People want to raise their concerns. It's quite interesting. Any other thoughts? It's very important. Resignations about bank directors, also independent directors, is also important. But now hopefully many more will be coming into light, and people will write longer resignations and reasons, so that they are looked after well by the new companies which will hire them as independent directors. As we mentioned, they are selected by generally the management, although they are supposed to represent the voice of the non-management. The word independence from management. Any other thoughts? So interesting. We have reached our time and conclude.
Thanks a lot, Manojji, and everyone.
Thanks a lot to all the participants to make it a great event, a wonderful event.
Thank you, Manoj, sir.
360 degrees appraisal review of all the issues till date.
Thank you very much.
Yeah, thanks everyone, and Dr. Ganatra, and the people who have already presented. Thanks to one and all.
Thanks everyone. Thanks, Christian. Bye.
Thanks all. Enjoy weekend. Stay safe. God bless all.